So this has been a nice little bounce here that looks like a juicy opportunity to reload on dollar shorts if you don't have them yet. My boat is all the way full. I'm very short dollars now. And the other thing is stocks, which if everything is fixed and everything is good, well, they certainly didn't show it today. They didn't go anywhere. So yesterday looks more like another one of these the White House stirs a tempest in a teapot, then unstirs it. And nothing's actually occurred. So they're getting a little soggy here, maybe. I mean, tough to call it, but if you look at the dynamics of all of this, momentum indicators are fading as you're setting at the very least equivalent highs or even higher highs, depending on which stock index you look at. So does look like an ideal place for a top if we get one. So we'll see. But the upshot of all of this seems to be that neither the Fed nor markets have any confidence in their expectations for what comes next. And in my mind, eventually that becomes just, you know what, I don't want to have market risk. I don't want to have capital out there when things are this dicey. It'll be interesting if then Nvidia says the same thing, because corporates have been telling us that things are very dicey and uncertain and they can't make up their mind. If you look at the PMIs going back to February.
Before Nvidia comes out in about a minute's time, we do have C3 AI has their earnings report out. They say for their fiscal fourth quarter, revenues up 26% year to date. Shares are up about 16% here after hours. Huge increase everywhere. You see the overall, total revenue for the fiscal year was $389.1 million, up 25%. Everything's good across the board. Even the EPS, the share loss was smaller than expected. So you see that they say strong demand, dramatically expanded our strategic alliances with Microsoft, AWS, Google Cloud, McKinsey. I don't know if that's good. Quantum Black, and renewed our expanded agreement with our longstanding partners, Baker Hughes. So they're using their enterprise AI to move into many different sectors with many different partners. I think ultimately, perhaps as a bellwether, that means demand for the NVIDIA chips are there. But it's the NVIDIA guidance, Mike, that we're going to care about. I don't even know if we care about the Fed meeting much at all, the Fed minutes much at all. We see here the share prices are jumping around as we wait to get those numbers. Feel free to shout them out if you see them, because I'm waiting for them to cross my screen here. HP has its earnings out, but that's not what we care about. That's not what we care about here. Is this one of those? Okay. NVIDIA earnings are out. Adjusted EPS 81 cents versus 93 cents expected. First quarter revenue 44.1 billion versus an estimated 43.29 billion. Whoa. Data center revenues 39.1 billion versus 39.22 billion. Gross margins 61% versus 71% estimated. Just looks like a miss all around.
Yeah.
Those numbers don't exactly jump off the page and scream fantastic. They expect the second quarter to produce a loss in their H20 GPUs revenue of $8 billion. CRM is also likewise out. Salesforce numbers are out here too. Those are coming in. I thought the Salesforce numbers were looking a little bit weak, but what do I know, apparently? We have the call at the top of the hour here, Mike. What do you make of this action here at Nvidia? We're still slowly nudging to the upside. I guess it's not as bad as people feared.
Yeah. Kind of on par with what we were expecting. Inside move, only 4 points, barely. If we stick with this range, within this range, I think it'll obviously be great for anyone that's sold premium in here. But yeah, like you said, I think maybe if we're looking at this data and it's coming in kind of meh, but the stock is rising, I think, like you said, maybe the sentiment was that we would have gotten weaker numbers, and we're not getting that, and we're seeing the stonk fly higher as I talk.
I mean, you had to get 76 and you got 81. It's there.
Yeah.
They do say that their full year operating expense growth is expected in the mid 30% range. I'm looking at this automated report put together by Google. Their free cash flow is up 75% year over year to $26.14 billion. It's pretty good.
I'd say.
Yeah.
What do you guys think of? So, some of these companies are shifting their supply chain to avoid tariff stuff. I wrote the Nvidia earnings preview a couple days ago, and Mr. Jensen was talking about how they're adding American manufacturing plants in Texas, Arizona, with a plan to produce $500 billion in AI infrastructure over the next 4 years in the U.S. Do you think that helps them avoid potential implications, even though they were already hit with a $5.5 billion charge? How do you think this plays out for their future with potential tariffs?
So, Ilya, I think there was a comment from the CEO, CFO of Alcoa recently talking about how they've had to educate the new U.S. administration on tariffs and what the implications actually are for onshoring. So, or rather reshoring. Let me just pull some choice quotes here. At first, the conversations were about education. The U.S. is importing over 4 million metric tons of aluminum a year. About 2/3 of that's coming from Canada. We only have 600,000 metric tons of curtailed capacity. So the U.S. right now has no ability to meet the current import need. We would need 4 or 5 new smelters. So think about that in terms of the investment that would be required. It would take 5 to 7 years to build those smelters. You're looking for a payback period probably over 15 years on that. And then think about the power that's needed, about 12 terawatt hours of power needed for each smelter. So these are the points that initially the U.S. administration was not fully aware of. So Mike, to answer your question, do I think that any of this is going to, are we going to get any of these significant projects built back here in the U.S.? Not if it's done by executive order. If it's done through Congress, then yes. But if it's done through executive order, if you're talking about it's going to take 5 to 7 years to build smelters, that's in the next administration. Who's to say the next guy's going to keep the Trump executive orders on, right? So like as a business leader, I just don't know how you still make those kind of decisions in this environment when the time horizon it's not like it could just be a switch that's flipped or even built out of the next 3 to 6 months. It's gonna take years to get any of this stuff brought back over here at any meaningful capacity.
Not only that, but you also have a very serious question about what you want to reshore versus nearshore. And that's then a question about, do you want aluminum smelting jobs in the United States? Or do you maybe want those aluminum smelting jobs in Mexico? And that becomes, of course, a question about the USMCA renegotiation and the sort of back and forth constantly. We're putting tariffs on Mexico and Canada. No, we're not. Yes, we are. No, we're not. Yes, we are. And all of that obviously muddies the waters further. So just to add on to what Chris is saying here, you already have a very robust supply chain for, let's say, autos that stretches both the U.S. and Canada along with Mexico and is incredibly effective. We're already eating into that. It would be easier and sort of cleaner to implement, let's say, a parallel structure for the inputs that go into that work, especially since, let's say, for aluminum, tons of it already comes from Canada. If you then smelted it in Mexico and then brought back finished product here, you'd have what would start to look like an efficient system. But you can't do any of these things, to Chris's point, when you're doing things by executive order and you're changing your mind, every, let's say, few days to few weeks on what it is that you're doing. I mean, look at this episode with the European Union we just had over the weekend. Tariffs went from, 20%, then, we're pausing the Liberation Day stuff, 10. No, we're going to 50 because they won't return our calls. We're going back to 10. So what business is going to be able to plan to do anything on that kind of a time horizon with that kind of volatility? It looks like businesses that have the cash war chest to survive will just do nothing and just wait.
138.50 here. Mike, you mentioned before that if this move currently holds, Nvidia is going to be looking at a little bit of an inside move. We were looking at plus or minus about 7%, $9 or so. Haven't really done that. We go into the session right around 134.5, so it's about $3.5, $4 to the upside. Not exactly a ton here, but it's worth noting that companies are being well received here after hours. Salesforce is giving up some of its gains, but it's still mostly positive on the back of its earnings report. C3 AI, likewise, it popped earlier. It's holding on to its gains after its earnings report. NASDAQ, which was lower on the session and near the lows as we were winding up with last call, has since rebounded now back to unched on the day, flirting with that 0% level. S&P up by 0.31, Russell up by 0.96, crypto a bit weaker. I suppose, Paul, we wait for this to digest a little bit more, and it seems like the market's made up its mind based on the current set of numbers before we hear from the actual executive teams of these companies on their earnings calls later tonight. The Fed meeting today, Mike, this is the minutes from the May meeting. It's not something that usually, not a recent memory, has stirred markets, but it's another at least opportunity for traders to check in on what these Federal Reserve officials are going to do with rates. I didn't see anything there that gave me any hope or expectation that we're going to get a rate cut anytime soon. Were you surprised or not surprised whatsoever about what happened with today's minutes?
I am not surprised at all. I've stated that I think we'll get maybe one this year, if any. And you can see the probabilities shifting that way too. You have 75% chance that we don't cut through the July cycle. I believe last time we looked at this together, we looked at September as the highest probability. It was above 50%. Now that's dropped below 50%. And these things move, but I don't see. So December, the highest probability at 38% is that we get 2 25 basis point cuts. I don't think that's going to happen. I think maybe we get one, which is still probabilistic, 30%. But between 1 and 2 accounts for the majority of the probability. So I'm gonna stick with 1 and stay there. But yeah, I don't see this as much of a surprise. I feel like, we talked about this before, when you feel like you're forced to cut versus when you want to cut or can cut safely, takes time to create that landscape. And I feel like right now we're fluttering around with a lot of uncertainty. So maybe 1, and I would not be surprised if we see 0. That's my take.
I feel like we learned, again, the Fed is not going to do anything in June nor in July. Something's going to have to break for them to get off their rocker. So rate cut odds going up. I think the context here is rate cut odds going up over the next few weeks would probably be bad news for risk.
This is really where things get interesting, because the more that the market is convinced that you need cuts and the more that the Fed resists, the less good everybody feels. And so you end up in a situation where I think you start to basically say the Fed is not going to be even thinking about anything preemptive here because they don't have a clear bias. They want to be cutting. They know they want to be cutting, but they knew that in December. They knew that in September of last year. They knew it even earlier. And those were maintenance cuts. Now they have no idea what they're doing and why. They just know that at this point, they're having a hard time reconciling what's going to happen with their dual mandate because they seem to be having divergent shocks that they're facing that would require them to both cut and hike depending on which side of the mandate you look at. And so at this point, it looks like where you'll end up is the Fed is going to have to let a recession start to happen so that they can unmistakably say, oh, inflation expectations are not going to get unmoored if we cut. And that probably means you're looking at weaker stocks, higher bonds, stronger gold, weaker dollar.
I'm going to take the argument that over the next few months, the Fed doesn't cut rates at all. It's a good thing for the stock market. It's that 2023, 2024 attitude where if the Fed keeps pushing back the cuts, it's ultimately because they don't see enough along the recession front to justify the rate cuts. I mean, if we get one later this year, let's say September or December, that does not scream emergency or the economy is falling off a cliff in a substantial manner. It suggests that they're cutting rates for maintenance reasons again, Ilya. So it's narratively in the way that it's portrayed ultimately conveys a certain message and context in which it occurs, conveys a certain a meaning. And so I think ultimately, guys, rate cut odds falling off the board here, it's gone alongside a rebound in the stock market, right? We were talking about a 3% year-end Fed funds rate back in early April. It's now closing in closer to 4%. So we've taken nearly 4 cuts off the board for 2025, and equities are up 17, 18, 20%, somewhere in that neighborhood. Nvidia up around 50%, 35% during that same time horizon. I do want to bring up
only problem there is, of course, last year against this very similar backdrop, if we sort of follow the logic there and say, well, this is last year's logic from mid-July into the beginning of August last year, stocks fell something on the order of 10.5%. If you look at where they were at this time last year versus where they were at the end of August, or at the beginning of August, rather, they're going into Jackson Hole last year, they were unchanged. And they didn't really scale back to their mid-July highs until September when the Fed finally did cut. So it's not so clean here. By mid-July is where the markets start to get worried about growth, and the Fed is still resisting. That gives us an almost 11% drop in the S&P over the course of basically mid-July through, let's call it, the beginning of August, say 2 weeks-ish. So you don't want to pull this rubber band too far, because when you do, the markets don't like it.
There was a note that Thomas and I discussed today on Futures Power Hour about how there's a new term making its way through the market. Ilya, you know how much of a fan I've been of the TINA mindset in recent years. There is no alternative to U.S. mega cap tech, and that's really been the base case for the past decade. The U.S. Exuberance, the exceptionalism of American financial assets. Robert Armstrong over at the Financial Times wrote an article a few days ago talking about how the new trading strategy on Wall Street is known as the taco trade. Have you guys heard of the taco trade?
From you?
I have, yes. It's just It's more popcorn-inducing entertainment for the masses. I mean, does anything surprise anyone anymore when these headlines come out?
Are you tired of the brain rot that politics is giving you?
How about some finance brain rot?
Yeah.
It's time for a crossover episode.
Yeah.
God, I hate that politics is polluting my FinTwit feed. But hey, the taco trade here, it's alive and well. If you were watching his press conference today, this is a funny headline here from Newsweek. Trump unloads on reporter who asked if he chickens out on tariffs. Because
perhaps you should explain to the people what taco stands for, just so we have full context.
Well, you can see here in the little caption, Mr. President, Wall Street analysts have coined a new term. This comes from Robert Armstrong over the Financial Times. Trump always chickens out on his repeated tariff threats. He was asked about this today, and this was the topic of Saxo's market call note on Monday morning, right? It's in Yahoo Finance. It's on the Hill. He was asked about it today. Funny reaction. I've never heard that. You mean because I reduced China from 145% that I set down to 100 and then down to another number? And I said you have to open up your whole country because I gave the European Union a 50% tariff and they called up and said, please, let's meet right now. You call that chickening out?
Oh, he does he does protest too much.
He said it was the nastiest question that anyone's ever asked him, and to never.
Fantastic, fantastic.
Oh God! Like, why are these reporters trying to
80% tariffs on Korea tomorrow? Why Korea? Why not?
Okay, so Mike, we've had a working theory here, and we've discussed this actually in recent days. That as you go into this boy who cried wolf cycle, where Trump barks and the market doesn't see a bite, and so that it reduces the half-life of your reaction function. Oh, he did these tariffs. I'm scared. Wait, should I be scared? No. Friday, for example, we saw from the EU tariff headlines, we recover half the losses by the close. We get the weekend's news. Stocks were up 2% plus yesterday. So at some point in time, for the market to take Trump seriously, he's going to have to deliver on one of these barks. Did the CNBC reporter, Meg Casella, rage bait the president of the United States into a round of escalation here? I mean, is this the bear case right now that you have to hope that Trump is going to act vengefully to prove to the world that he is not a taco?
In my mind,
that's where I'm at.
In my
hard-hitting
mind,
analysis here at Tasty Live.
It certainly could be. Obviously, we are all sober economists that are very carefully analyzing the data here. But yes, it's possible. It's possible. I think it's really funny that people say he's chickened out, not because I support the president's policies and not because this is a political argument. We have a 10% baseline tariff that the administration is sticking with. That's a 5-fold increase, and I will never get tired of saying it. It was an average tariff of 2% before all of this. Now it's an average 10. That's a lot. That's a big, big, big increase. We haven't seen tariffs like this in, if I say decades, that would be modest. I think actually it's more than that. I think we're probably,
almost 100 years.
Yeah, we're probably approaching 100 years. So
the time before that we had a serious tariff episode in the United States was 100 years before that. And right. My understanding of this is it's because everyone who was alive during the first tariff episode had died by the time the second one started. And so no one was around to remember those lessons. And so then we do our whole, tariff thing in the 1920s and 30s again. Yeah. And now all those people are dead. So we're going to have to relearn the lessons of history once more every 100 years. It's plague, again. Tariffs, plague, and then tariffs, right? 1917, tariffs on the other end of it.
Yeah.
All right.
This is really the whole thing. Has he chickened out? Well, unfortunately, no. Because unfortunately for the economy and unfortunately for inflation expectations, no. We are still looking at a huge increase in tariffs. It's just this funny thing that we're doing where it's like, well, oh my God, it's bad. Well, it could have been worse.
Mike, but this is like, I heard this great chat today. I forget who it was who said it. It was on the podcast Forward Guidance, which is a really good podcast that you should people should listen to if they're interested in monetary policy and markets in particular. But the person who was being interviewed said that, you know, the U.S. economy with this kind of deficit spending, with the government spending this much money, it's kind of like a beach ball that you're trying to push underwater. And so, you know, for that analogy, for people who are having trouble visualizing that, because as I also recently learned, apparently people don't see things in their mind's eye. Like when you say, hey, can you imagine an apple? There are a subset of people who are like, no, what are you talking about? I can't see an apple in my head. I don't know. Is that weird? I can see an apple in my head. Anyway,
sort of like when you hear people don't have an internal monologue.
Yeah, that's, I was going to bring that up. Yeah.
There are people who don't hear a voice in their head.
What like half
you
of people?
You don't talk to yourself in a British accent. You don't talk to yourself in a female British accent. Like, what do you? Like,
what is this? Who are you people?
No, I can see the beach ball. You're trying to push it under, and then you roll over because the weight is high. And like, you know, I can get the whole 3D thing going.
Yeah, right. Yeah, rocket science. This is not.
Yeah.
Right. So like you're pushing it down and it stays down for a little bit, but eventually it bounces right back up. And the U.S. economy is taking its punches, but core GDP last quarter, Ilya, was still 3%, stripping out the trade and the government spending and the inventories. And so the economy has like it has enough there still where if we get away from all this nonsense and CNBC reporters don't rage bait the president of the United States into the next round of arbitrary and capricious tariffs simply to prove that he's a big boy who people take seriously. You know, like, why wouldn't this thing just keep going up? So what we have a wall of worry in front of us right now, Mike. I think that's the best thing for sentiment. Although, Ilya, I do need to have some fun at your expense and perhaps a sign of the times. There have been 3 occasions where people have tweeted at me something along the lines of, is Ilya ever bullish?
Yes. Ilya is bullish. I'm long Brazilian stocks right now.
I could hear Tom listening to that and going, I'm going to kill him.
I'm bullish on the bonds. You don't have to be bullish on a particular market. I'm bullish on the euro. I'm bullish on the pound. I'm bullish on the yen.
I was literally just going to say he's bullish on everything that's not USD, like the opposite.
Yeah, I'm bullish on all kinds of things, just not US stocks.
So just going back to like the whole sentiment thing, I think it's just crazy. So like, you know, he was elected. You had this huge like euphoria rally where it's like, oh, everything's gonna be fine in the U.S. equity space with Elon, like Tesla ripped high, like 100% higher in however long. And then you sputtered out. If you look at a chart in the beginning of 2025, you sputter at 6,200, sputter. Then you have this like, ooh, what's he doing now? Like, what are we doing? And then you see the market come down a little bit, recover. And then the tariff thing hits. And I remember being on with you guys when this happened. And it was 10% across the board. We ripped up 100% or 100 points higher. And then he's like, wait, check out my poster board. You guys aren't listening to me. And then we dropped.
But wait, I have a board.
Yeah. And then we dropped, 20%, whatever. Then they're paused and we have the historic rally in the NASDAQ. And ever since then, except for a few days, like we've been on a straight line higher, like a literal V bottom. And I don't think any of us were expecting a V bottom like this. But what's so funny is that now, like I think you said it best, the wall of worry is where we're at. And like I personally have no idea where we're going from here. But I can look at volatility and be like, okay, we're in the high teens. We're not in backwardation anymore, which supports the upward drift over time. But you've got people, calling out the taco stuff, and anything can flip in the matter of and like literally not much has changed other than a couple deals here and there. But like once we actually get more information on the true tariffs across the board, I think we might just chop around here. Like I would not be surprised to see us chop between 6,000 and 5,800 in the E-minis for the next month or more. It just feels like there's where do we go from here? Nobody knows. How do we make adjustments to the interest rates with the data we have? Don't feel like we can yet. So it's just like, I feel like we're spinning our wheels here. And normally I'm like, oh, we V-bottomed, we'll just skyrocket from here. But it doesn't really feel like that right now.
No, and I bring up the sentiment check, if only because, Ilya, I do want to give credit when people send me these things or give me the tap on the shoulder, like, oh man, is Ilya ever bullish in U.S. stocks? The week you were out in February this year, last July. So February, the week you were out, you come back and we get the PMIs, and that kicks off the decline. Last July, famously, is before we have the market keel over with the yen carry trade blowing up or whatever that was at the start of August. This is the third time I can point out people chiding you for not being bullish on stocks, and those type of things have not happened near the lows. They happen near the highs before the market spills over. So as much as I like
out next Monday, and so prepare yourself.
Well, that's one of the indicators, Mike. It's so funny. Nick Batista sends me a message last week. He goes, "Oh yeah, by the way, there's a thing here. Whenever Tom and Mike Butler are out of the office at the same time, the market crashes."
Yeah.
I'm like, okay, whatever, Nick. But that makes it everyone has that little thing where that you notice that there's these coincidences, and we're not paid to believe in coincidences. And sure enough, Friday the tariffs are announced and VIX pops, and I was just like, oh my God, Nick is like, that's Lisan Al Gaib. That's him. That's the guy.
There he is.
Well, Nick has scar tissue because we used to answer phones. We used to literally answer phones on behalf of a different broker, and I would leave, and they'd be like, "Oh my God, I hate this. I've got the phone's ringing nonstop. I can't even do my job." And I was like, "Well, thank God I wasn't there." But that's why he says that, because I would leave and something would break, and then everyone would be frantic, and I'm just chilling elsewhere. So that's where the scar tissue comes from. But yes, there is something to that. When Tom leaves, something happens in the markets. It's almost as if he's, the Wizard of Oz, just pulling the strings in the background.
That we have an important sentiment note, because last week we had our very special occurrence where Tom decided to cancel the handoff for overtime.
Yes.
I've been kicking around this fun graphic internally.
Yeah.
It's like a modern day markets in turmoil, if you will.
Yeah.
And last Thursday when we were on the air, we noted that couldn't help but notice that when there is that kind of sentiment in the office that, we shouldn't do the handoff today, maybe it comes near a market turn. And sure enough, when we had looked at all the occurrences where the handoffs were canceled in recent memory, accounting for people being out like myself or Ilya or Dylan not being there, so there's no handoff, right? It's done for market reasons only. The 1 week return on the S&P 500 was plus 2.26%. We are officially a week since overtime was not given its handoff last Wednesday. We are 0.94% higher. So not quite the average, but the market did go up afterwards, Ilya. So I think I'm going to keep this in my pocket now as one of these sentiment checks. I have my list here. When people tweet at me, how come Ilya's never bullish on U.S. stocks? Okay, we're near a market top. When Tom cancels the overtime handoff, okay, stocks are going up over the next week. When Mike and Tom are both out of the office, you buy the zero DTE puts. I'm learning about all these little things that you could look out for, the signposts that were near a turn. But I just, Ilya, I suppose this whole no handoff for overtime thing, put another check in the column.
That's right.
Hey, if you don't see us on last call, folks, buy stocks heading out a week. That's the answer.
It should help also to point out that the cover of The Economist this week does not have anything to do with a particular asset class. So while for the past several weeks we've had, oh my God, meltdown, and then stocks go up, and then, oh my God, crypto is a swamp, and crypto goes up. This week we're talking about science on the cover of The Economist, and the assault on American science. Apparently, I haven't read the cover story yet, but this is good. We have some clearance. If we're
getting long biotech now.
Yeah.
If the economist is bearish on U.S. science, then
honestly, there's no bigger bull signal than when you get the personal text of what's going on in the market. Are we crashing? Crash has already happened by that point. And then when you tell people like, oh, well, we're down 20% historically, if you invest in the S&P or whatever, like something conservative, it has recovered over time. And then when people say this time's different, that's when you know the bottom is close.
yes.
It's just the crazy phenomena of the brain working and just crowd sourcing the same information and compiling on one another. But that's really why trading small is so powerful, because you can still absorb that move, but it's not going to blow up your account, and you'll have cash on the side where you can participate moving forward. I think that contributed to the big downside move we had, because we had such concentration in a lot of these stocks that had the perception of getting hit hard with tariff implications. And then the flip side, once they're down 30-40%, you're like, wait, I can buy Nvidia at multi-year lows. I can buy Apple at multi-year lows. I can buy Microsoft at multi-year lows. Okay. And I think that contributed to the V bottom on the other side too. But we still have some stuff we need to see. We need some numbers. We need some tariff numbers before we're out of the woods.
One interesting thing that I've been noticing the past several days, if you look at the way that the bond market inflation expectations have evolved, then you look at the S&P 500, you see that from about mid-February, you get this very clean parallel decline in 5-year break-evens, 10-year break-evens, and the S&P.
The Knicks played last night. Do you think I've been looking at inflation expectations in the bond market?
I suspect so.
No,
and then
I've been mourning all day today.
Well,
losing money on my prop bets, Mike. It's just.
Well, you just smashed the under on Karl Anthony Towns. Anything that happened, he's the reason why your Knicks are not advancing. Got
to trade him.
Yeah,
trade him for Giannis.
Sure.
Tell you what, that same kind of disparity is what you see in stocks and bonds, because stocks are running away somewhere, but the bonds are telling you because inflation expectations are not rebounding, and now you've opened up this giant wedge. You're going to have to rethink the whole thing, much as I'm afraid to say both the Warriors and the Knicks are going to have to do. The narrative seems to be off relative to what has actually occurred.
Yeah, I'm not out here saying trade Brunson, Mike, but dark days are ahead. Dark days.
You know what's funny is one of my best friends, his cousin's daughter married Jalen Brunson. So now whenever he does anything, we're like, your cousin just won the game. distant cousin. But yeah, Jalen's okay. No one's beating OKC. So at least you have solace in that OKC is winning the championship for sure. Nobody's beating them. And if that plays out, there's nothing you can really do.
No, I mean, like the fact that Anthony Edwards looks so gassed at the end of these games is just such a strong tell, because if he rolls off like Caruso, that he's going to go down into the paint to deal with Chet Holmgren or Hartenstein. So Anthony Edwards couldn't carry them over the finish line the other night because he just has no energy. He's getting guarded by all these elite ball defenders. Anyway, we could turn this into a basketball podcast. We could go into that. My brother's a professional sports gambler, so like that's what life is outside of the office. Just perfect. Talking numbers in sports. Yeah, guys, so we have a few minutes left here. Mike, give me your nuclear take on something to close out the show. NASDAQ's finishing above water as we go into the end of the session. We erase that late day decline. Is this the green light for the second half of the week?
I don't think so. I think we'll still chop around here with kind of inside moves. I'm going to take the other side of this move. I think you see Nvidia open tomorrow morning lower than 141 where we're at now. I think you see it come back down into that like 138, 139 range. Because I mean, this market is just so dull, and like we have through May 30th, end of the week, 70-point expected move. It's not a lot. Not a lot. But we'll see. In other words, I would be surprised if we just blast off from here for no reason. I think we'll chop. 200-point range for the next month. That's my call here. Or until something
200-point range.
Or until something. Yeah, until something changes. If something crazy happens, then I think we'll see the markets move, of course. But until something changes here, I think we're just going to chop.
Hell yeah. Rick Ross once called himself Big Meech Larry Hoover. President Trump pardons the actual Larry Hoover. Somewhat.
Wow.
It's a throwback, if I ever heard it.
That'll be well liked in some circles.
Kanye West is a big fan, so there's that. I suppose that's a note we can end on, talking about Kanye West. Overtime's out of time for today. We'll be back tomorrow, same time, same place, right after last call, 4 p.m. Eastern, 3 Central. For Mike Butler in Chicago, Ilya Spivak in San Francisco, I've been Chris Vecchio in New York. Nvidia earnings call coming up shortly. Ilya's on for Macro Money. I'll be back with Victor Jones later for The Price of Truth. Stick around. Tasty Live at Night coming up next.
See you there, everybody.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move. The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Live's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
I want to play a game. It's a relationship game. So I'm going to ask you each a question.
Who loves the hardest?
Yes, yes, yes. So are you ready?
Kentucky.
Who's more stubborn? Who's more public? Who's more patient?
These are two of the least. These are the least patient people I've ever met.
I'm going to say him just because he's a little older than me.
Who calls or texts more? And who do you think takes longer to get ready in the morning? Who's a better driver?
I drove a truck in New York City.
I can fly an airplane.
Who loves the Fed the most? Who's the bigger spender, do you think?
Me. Yeah.
Who's the alpha in this relationship? Who is more spoiled?
Oh, him.
Who do you think is funnier? Who is the better debater?
Well, I'm gonna give it to him.
Dylan, you think you're the better debater? Are you the master debater?
No, he's he's good because he doesn't answer the questions, which is great for debating.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
Stock markets marking time today despite a little bit more event risk, and it doesn't look like they're paying much attention. So what will it take to move things along, and what is it that the markets are so concerned about that they can't seem to build on yesterday's exuberance? That's what we're going to tackle here on Macro Money. I'm Ilya Spivak, head of Global Macro here at Tasty Live. And what we'll do here is we'll take a look at what seems to be inspiring these markets here and how that is leading us into this sort of confused standstill, which we can readily see here on the S&P 500, and what will it take for these markets to start to be a little bit more convinced about what's going on. Obviously, we didn't have the world's greatest amount of economic event risk, but what we do see here is a little bit, at least, by way of the FOMC minutes for the May meeting that came out here. And as we discussed yesterday, the main sort of issue here, of course, was that the Fed seemed to come out in May with quite the defensive sort of language at the same time that we were already well into a recovery from April's crisis lows. And we can see here, just for reference, the Fed meeting was May 6th through the 7th. That's right here. By the time we're here, the market has already rallied close to 19% off this low and has erased more than half of this overall decline. So needless to say, the markets are feeling pretty good right here, but the message from the Fed was decidedly more downbeat. We can see from the policy statement here, the story was that uncertainty about the outlook has increased further, that risks of higher unemployment and higher inflation have risen. So even just in the policy statement, things are a little bit unnerving. And then, of course, Fed Chair Powell had his press conference, and he was quite feisty and really pointing a finger at trade policy and saying, this is a black box. We don't really know what to do here. We know that in the past, what has happened is tariffs have been bad for growth and something that is generally inflationary, but we don't know how this episode is going to work out, so we're going to sit on our hands. And when you look at the minutes that came out from that meeting, you get the sense that something very similar is on display, and I've highlighted a couple choice points here. So we can see here there's that May meeting. As we saw in the statement, they agreed that policy is well positioned to wait for clarity, because very clearly here there is a risk that unemployment will be higher. There is a risk that inflation will be higher than anticipated. We see that here. And we get this sense then that the Fed is feeling like its hands are tied and that it's not going to make changes. Now, what's especially interesting here as well is that we get the sense that inflation is expected to be more persistent than expected. Moreover, growth is expected to be weaker. We see here that the staff projections for 2025 and 2026 GDP as of May are actually weaker than what was estimated in March. And in March, we already had downgrades. We can kind of see what all of this looked like in the March summary of economic projections, where we see that growth has been revised lower for this year and next, inflation higher for this year and next, unemployment rate at least higher for this year and then steady thereafter. So what these minutes imply is that in May, the divergence got more aggressive. And we can see here, participants noted they may face difficult trade-offs if inflation proved more persistent while the outlooks for growth and employment weakened. Now, this is not a happy mix, but the markets clearly opted not to panic in any kind of a discernible way. We're a little bit softer here after yesterday's jump, and perhaps that's somewhat telling, at least, of just how much follow-through there was to be expected on yesterday's jump. That, of course, follows news that after Friday's teasing of a 50% tariff on the European Union coming out of the White House and the walking back of said teasing over the weekend after apparently a happy call between President Trump and Ursula von der Leyen of the European Union, we end up with a healthy jump. The markets basically reset to where they started to top out ahead of last week's price action. So we get this pop, but then we stall. And we stall perhaps waiting for Nvidia's earnings, which have become a somewhat macro level risk. They've of course come out already and narrowly beat expectations. Or maybe it's just that the markets don't have conviction beyond headline risk. And perhaps then that lack of conviction is what we have on display here. Because if, in fact, the markets thought that everything was going to be just fine and the tariff threat had diminished, and we, of course, had reports of the emergence of this so-called taco trade, which, while the former Tina trade, there is no alternative, was a reason to buy U.S. tech stocks because there is no alternative, then the taco trade, which, funny enough, the president was pointedly asked about today, that stands for this sort of sense that the president always walks back the tariffs. Trump always chickens out is the acronym there. Now, we're certainly not suggesting that a 10% tariff, whereas it was a 2% tariff on average before, is anything like chickening out. That's not our perspective here on macro money. But there is this sense that that's what's going on, that's emerging in the markets, at least if you believe the chatter in the headlines. But of course, if that's the case, then why did stocks not keep going higher? If in fact there is no issue here and the Fed is wrong to be so circumspect and wrong to be so concerned, then why in the world won't we have the ingredients for a larger rally if in fact the all clear has been sounded? And it would seem that at least at this point, we don't have those kinds of ingredients. And perhaps the reason that we don't is the markets themselves are not much less confused than Federal Reserve officials. And you get this sense when you look at the market's baseline expectations for economic activity. The Atlanta Fed puts together this model for GDP expectations. It's a nowcast. It takes in incoming economic information and with an update every several days, sometimes even back-to-back days, gives you a sort of running tally on the tone of economic data going into a GDP release and what it might mean. And we're so far removed from second quarter GDP numbers that the actual model is probably much too early to show us anything, and you can see it idling here. But the major takeaway really is this giant range for baseline market expectations against which the model is getting graded. We can see here that the range of baseline expectations for second quarter GDP is shockingly vast, from a decline of 1% to growth of 3%. So nobody really seems to know what's going on, and that seems to not just be central bank officials, that seems to cover the Wall Street consensus for where things are heading. So with that in mind, we have a little bit of economic data left here for the week to see if we can't get a little bit more of a bias. And it begins with the Fed's favored inflation gauge, the PCE index. You're expecting to see further disinflation here, down to 2.2% on the headline and 2.5% on the core. That core is, of course, something that the Fed watches very closely, not only because most inflation is buried in that part of the equation, as you can clearly see here, most of it is in core services, but also because the Fed doesn't very much have agency over global food and energy prices. So needless to say, it focuses on where it can actually do stuff. 2.2% on the headline would be a significant sort of downswing. It would be the lowest inflation overall in 7 months. 2.5 at the core would be even more impressive. That would be the lowest since March 2021. So it would be returning us basically back here somewhere. So meaningful progress expected. The monthly increases seen as 0.1% for both core and headline, which if you look at what this would imply for the kind of running tally of where inflation is trending, the Fed looks at 3-month and 6-month annualized monthly changes to kind of get a sense of the trend a little bit more dynamically than year-on-year data. And you can see here, for 2 months now, we've seen this sort of cooling. And if we get the data coming out about as expected, then we'd be looking for a third. What's especially interesting here is the parallel to last year. We'll recall that last year the Fed also was resistant to cut rates toward the end of the first and going into the second quarter, even as the market was screaming that it's time to go. And you could see that with these increases here and the run-up in the higher frequency annualized measures here. So we can see here the 3-month annualized rate ticking higher, the 6-month annualized rate ticking higher. And we can see that on the way back down, it takes the Fed from a peak in March in these inflation numbers all the way out to September here before it actually feels comfortable cutting rates. And if we hear then what the minutes say and we see these dynamics, then perhaps we're looking at something similar where things are starting to go the Fed's way, but given their reaction function and how much slower they move relative to markets, we could be looking at another prolonged period where the Fed resists while the market wants rate cuts. Aside from this, we're looking at a range of revisions, the most notable ones. The second look at U.S. GDP is coming up. It's expected to confirm that we got a 0.3% contraction in the first quarter. And, of course, the markets are going to be looking at these internals here and seeing if anything about the skew from surging imports and the stuffing of those imports into inventories and then the driving of a jump in investment on that basis. If that continues to be reinforced, it seems likely. But the real story here is about growth in consumption. Because once you take all of this tariff front-running anomaly out of the equation, it's this part that matters. And it matters most, as we've argued here extensively, because consumption is nearly 69% of overall GDP, whereas everything else is more like an afterthought. And in fact, when you net out exports from imports, they come out to less than 5% of the whole thing. So, and netting them out is how you do GDP math. This isn't just doing random things to make the numbers feel small. So when you look at that and you notice that in the first quarter you had the weakest consumption growth in almost 2 years, going back to the second quarter of 2023, the numbers take on a very different tone. Yes, there's a bunch here back and forth on tariffs and the front running of them, but that's not really the main story. It is, what will U.S. consumers do? And will they actually buy all of this stuff that has now been stuffed into inventory? And at what pace will they buy it? Because if they buy it slowly, if they don't rush, well, then inventories are going to stay full longer. Businesses will have less impetus to buy more. And of course, then economic activity slows. So the second revision for us to keep in mind is to the University of Michigan measure of consumer confidence to see what, in fact, consumers are going to do, because April's retail sales numbers looked soggy, and the consumer confidence numbers for May looked like they were some of the worst readings since the lows from COVID, where inflation was peaking at the expectations, and of course that led to a dramatic decline in sentiment. And as inflation expectations started to cool, so too sentiment started to improve until this tariffs episode right here. We can see inflation expectations have surged. Sentiment has fallen off a cliff. The expectation is we'll get confirmation of these same numbers. This survey, interestingly, runs only through May the 13th, so only a day after the deal with China to postpone tariffs. Yesterday, we saw the rival consumer confidence gauge from the conference board, and it runs through the 19th, so there's a little bit more time there to digest the pause on trade barriers with China, at least those at full embargo levels of 145%. Now we're looking more at like 30 until yet another cliffhanger in August, when maybe the reprieve expires. And here there was an improvement in consumer confidence, albeit from a very low level to a less low level, but still an improvement. And it was across both the measures of the current situation as well as of expectations. And encouragingly, the expectations improved more. So maybe we'll get an upside revision on consumer confidence. We'll see if that holds. What's interesting when we put all of this together is that the markets appear to be choosing a kind of bottom line through all of this uncertainty. Because when we look at what all of this has done to Fed policy expectations, we can see a very similar story to what was happening at about this time last year. Expectations for policy this year are getting anchored. But because the markets think that we need more easing, expectations for next year are getting more dovish. And so as the Fed resists action, as the markets appear uncertain of what to do next, we get just 41 basis points in rate cuts on the menu for this year. That's lighter than the Fed's own forecast of 50 basis points. But that is translating into a more dovish outlook for next year, where we now have 59 basis points. So we're still looking at 100 basis points in cuts this year and next, as the Fed envisioned. Current rates, we can see here, are at about 4.4%. That's the middle of the target range from 4.5 to 4.25. And the Fed anticipated that through 2026, we'll come down 1%, from 4.4 to 3.4. We're still seeing that, but the markets think that the Fed's resistance now will mean more cuts later. And if all of this economic data comes in generally close to expectations, well, then more of the same seems likely to continue, because what the markets appear to have decided is that easing is coming. It's just coming later, and there will perhaps need to be more of it, while the stock market seems to have somewhat of a different perspective. Notice here the evolution in the benchmark S&P 500 here as a kind of catch-all for quote-unquote stocks, or general kind of risk sentiment in the markets. And the bond market's inflation expectations, these break-even rates that you get when you take the difference between nominal and real bond yields to get at the inflation adjustment that gets you from nominal to real. And so you see here that right around sort of mid-February or so, you start to see them decline in tandem. And of course, once you get into April and into Liberation Day, there's a level of hysteria for both inflation expectations and for the stock market. And all of this largely follows a growth scare. So in the second half of February, you start getting business confidence data, consumer confidence data that's telling you that the tariffs roll out. Not so much the idea that there will be tariffs, because if that were a concern, then the markets would already be freaking out no later than November, once the election was done, considering the president talked up tariffs all through the campaign. No, it was more the rollout. And once business and consumer confidence started to retrench, that's where you started to see the markets go, uh-oh, this is a growth scare. And so not surprisingly, stocks and inflation expectations go down in tandem, because weaker growth is disinflationary. And so markets start to mark down inflation expectations. What's interesting is what we've seen since. In early April, we can see there's a bottom in both, but stocks clearly have returned to levels where inflation expectations have not. Stocks are almost 70% back from this decline. And we can see here inflation expectations are still somewhat downbeat and pointing to the threat downwind being of weaker inflation and perhaps therefore weaker growth. So the markets are over here seemingly saying there will be a growth downturn, or at least the risk is that inflation will surprise lower versus where expectations were at the start of the year. And that's largely because whatever economic downturn happens will overpower whatever upside risk to prices from the tariffs that the Fed seems to be afraid of. And so the market thinks the case for cuts is there. It just doesn't think they're coming because the Fed clearly isn't of the same mind. So we see here, we have basically no changes in rates until we get somewhere over here. So perhaps we get a cut in September. Maybe we have to wait until November. But if we take a look at what the cumulative expectations look like for the September meeting, it's about a 60-40 split in favor of a cut. But the probability of standstill is uncomfortably high at 40+%, almost 41. And so you get the sense that you have now the market's convinced that it's time to cut, but also convinced that the Fed won't do it, at least for a while, that it's going to let the economy get hurt, that it's going to let some kind of a recession, or at least the precursors to it, take hold where it can conclusively feel good about inflation expectations being anchored before it acts. And what all of this boils down to, perhaps, much as it did in mid-July through August of last year, once this similar sort of narrative took hold for markets. You can see that right here. There is then an adjustment. And the markets say, well, growth is going to be weaker, earnings are going to be weaker, rate cuts will come later, and the upshot becomes weaker stocks, higher bonds. And against that backdrop of future rate cuts that aren't coming soon, against the backdrop of that kind of a speculation, a weaker dollar and stronger gold. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. Back with Chris for Futures Power Hour Mondays and Fridays. On with Victor Jones for the Price of Truth on Tuesdays. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com and commenting on the platform formerly known as Twitter and on Blue Sky at Ilya Spivak. Thanks very much for joining. If you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Happy trading.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
I distinctly remember getting an email from Tasty that Lookback had just been released, and I was doing the most laborious back test on the face of the earth before that. And I did 2 or 3, and I saw how quick it was, and I saw how quick the data was, and basically instantaneously, like, I was hooked. I'd always seen all the stuff on Tasty Live with all the data and all the value I thought that bring, and then it was all of a sudden I could control that and basically make my own segment for myself of what fit. And that democratization technology, I think, drastically changed not only the landscape of what's out there, but drastically changed my ability to learn at such an insane rate. And that's kind of when I developed a little bit more of my own path. I was like, this is the type of trade I exactly want to see, or I'd get some type of inspiration from Tasty Live to look at that. And that's when my consistency went from like 1 to 30, and I haven't had an unprofitable quarter since.
Calling all traders. Are you using Tasty Live mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Having trouble understanding what your trader buddies are saying? Here's what it means when they say catch a bid. The term catch a bid is in reference to the stock's price action. The bid price is the price at which you can sell a stock at. When a stock continues to go down, so do bids, meaning the price at which you'd be selling the stock is continuing to go much lower. If you miss it, you can't catch a bid.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London.
Calling all traders. Are you using tastylive mechanics and enjoying awesome results? Are you an up-and-coming options savant? We're looking for you. For over a decade, tastylive has shared the most inspiring stories of traders teaching themselves a new skill, using probabilities and experiencing new levels of success. If you think your trading journey should be shared with Tasty Nation, we'd love to hear from you. We are always on the lookout for the next class of rising stars. Email us at risingstars@tastylive.com if you'd like a chance to share your trading journey and inspire others.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Research with fundamentals, endless forecasts, and more. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. See probabilities, max profit, and Greeks in one click. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Welcome back to the Tasty Crypto Show. I'm Dan Cecilia, filling in for Ryan Grace, and with me today is a very special guest, crypto options savant and founder of Panoptic crypto options platform, Guillaume Lambert. What's up, Guillaume? Thanks for joining us. How you doing?
Hey, I'm good, very good. And how are you?
Good, good. I'm really excited to have you on. We love hearing from crypto options experts and just getting your take on the market and what you've been doing. And so, let's get into it. Take us on your crypto journey. How did you get started in crypto?
Yeah, this was kind of a 2017 is when I first got exposed to crypto. In my previous life, I was in academia. So I was actually an assistant professor in applied physics at Cornell University. So tenure track position, very, very top of the chain, if you want, which I was interested in technology. So Bitcoin, I heard about it quite early on, didn't latch on. So I guess I regret this decision to this day. But Ethereum and kind of promise of smart contracts, which is this other blockchain, was very enticing to me. I got started trading CryptoKitties, which is an app that was a bit viral in 2017. But overall, just was interested in crypto from a scientific interest. What I was able to do is to use the chain, understand kind of the protocols. You can lend, you can trade, you can swap, you can do a lot of the regular options, the regular kind of financial activities, but on chain, which is kind of this parallel system. And through that activity, I was able to figure out, all right, I want to trade options. I'm a tasty trader myself. Never got to trade options on crypto. It was very, very early on, 2020, 2021. And even if you try to trade now, it's very illiquid. You have Deribit, you have the big centralized exchanges, but nothing on chain, which is where I lived for the first few years there. So the key point is that I got to a point where I pretty much decided to start my own company to create options on digital assets. I was able to kind of latch onto one way that we think works very well on chain, in a way that you cannot necessarily do on a centralized exchange or even on kind of the CBOE. You cannot do options on Panoptic, the Panoptic options on CBOE, because we can do options on any asset. Could be a meme coin, could be Bitcoin, could be different stable coins. So that journey from assistant professor of physics to tasty trader, eventually to being a founder, was just me wanting to trade options. And again, I'm using the interface myself quite a bit to trade options now that we've been live. And yeah, I'm enjoying quite a bit. So it's a very personal platform. We drew a lot of inspiration from Tasty Trade and TT Works back then. But yeah, now it's live. And again, I think I'll show it later. But yeah, it's a long journey, I guess.
Yeah, no, I think that's great. I think your story is very it's very similar to a lot of the coworkers here or just other personalities we have on the shows. Very much deep in the weeds, maybe academia or quant, mathematics, physics background, fell in love with options through, what we do here at Tasty, and then sort of found your niche in crypto. I'm curious on two things. Number one, when you were trading on Tasty, did you just trade equity options? Were you a futures options guy? Like what was in TradFi, what was your go-to?
Yeah, mostly ETFs, a few options for specific equities, futures, man. So I got wrecked. I think it was corn futures in a weird way, like in 2021 when it was moving relentlessly. And then my wife looked at our tax return and said, what the hell is this? So I'm staying away from futures.
Okay.
I do trade it once in a while. The VXM, so the micro VX, just to hedge for but nothing on that option side.
Yeah, everyone's got to know their limits, right? Everyone's got to know their limits. So
freaking corn, I was like, this is not something that should be dangerous, but it's a huge size. And then I definitely got caught.
Okay, so with that, maybe commodity futures aren't your thing, but what's your approach to trading crypto markets? Are you only Bitcoin? Are you a meme coin guy? What's your approach there?
Yeah, so the way that Panoptic works, it works with any coins. And people were, in a weird way, selling options on these meme coins. Again, selling options is very dangerous. And again, if you're not covered, can be very, very large losses. But there's a little niche in the the blockchain world, which allows you to swap easily. And you need a liquidity provider on the other side that is selling options. No one knew about this. No one realized it was selling options. Everyone got wrecked. But then again, with my experience from Tasty Trade, I was able to say, okay, this is like an option selling in a weird way. No one asked for it, but this is just what we got delivered. And I was trading options, selling options on these meme coins, a little bit of Bitcoin, but surprisingly doesn't move that much. It's like very like mid-tier volatility compared to meme coins. But a lot of what it was doing is meme coins. Again, Shiba Inu, you can trade it on Tasty Trade, but you have this whole spectrum of coins. Meme coins, quite a bit. Few of these DeFi protocols. So protocols, instead of having a stock or an IPO, they do like token launches. You can trade on them as well. And mostly ETH as well as the kind of Ethereum is the platform I use. So this is where I was trading or selling these options back then. And it's in the protocol called Uniswap, but anyway, this is kind of what I do as well on Panoptic. You can do any options, mostly focus on ETH, but then the medium to long tail definitely something I do.
Interesting. And so you speak about like Shiba Inu, Doge, obviously these are coins we have on our platform. What are you looking for there? Are you looking for like elevated IV? Are you looking for like high premiums that you can kind of like sell covered calls against? What is that specific approach, specifically like Shiba Inu, Doge, or those meme coins?
Exactly. So these have extremely high implied volatilities.
Okay.
People are a bit scared of selling options on those, so they stay away. So you can actually contribute quite a bit, and the market means that these meme coins have 200, 300% IV in this weird way, and then a lot of that signal is okay. What's the IV? I had to compute the IV from like it's not shown on anywhere, so early on I just had to compute it and show it on my computer. But this is the entry point. IV, the same way that it's IV rank say on Tasty Trade, I use IV as the signal. Same thing with even BTC and Ethereum. Look at IV rank, IV percentile, and like look at these kind of transitions that says okay, market is moved, liquidity is drying up. This is a good time to jump in.
Gotcha. Yeah. And what specifically like what's your signal? Like, is it a certain, range? Is it a rank? Like what are you looking at there? Like that, okay, the IV is really high on this. I feel like this is mispriced. Let me go in, let me collect some of that premium. What is that trigger for you?
Yeah, it's IV rank. It's a similar like 30 IV rank. Again, drew inspiration from you guys. It's definitely something that I pay attention to, and that's a threshold. It's not research by any means, but I'm just using this as a starting point. Okay. And as you mentioned, the strategies, I would actually create straddles. I would not create covered calls. I don't want to get stuck with that meme coin, So I would borrow or short part of the meme coin to have something was a bit more neutral, or even fully bearish, where I would short all of it, make money on the way down, but also earn premium on the way down at like 200% IV.
Yeah. Because I feel like being in the crypto markets too, you see, it's like, okay, these things shoot up. They have crazy, IV, crazy volatility. It's pretty obvious they're going to come back down to earth. So like you said, it being able to express a straddle or like a market neutral, even to the downside, is probably the way to play some of these, especially when they go parabolic for a couple days. It's like somebody's cashing out. So it is fun because I think like in comparing it to traditional markets, there's not a lot of edge, right? Like or there is, but you need to be like a big funded, big pocketed whale essentially. Whereas in crypto, these opportunities exist for smaller accounts, I think. And it's very simple kind of like rules, similar to what we follow here at Tasty, IV rank, and just, putting on risk-defined spreads. So it's really interesting that you're able to express that and do that on chain. So Bitcoin's been pretty big, right? Recently, we got Bitcoin conference going on this week out in Vegas. Sailor MicroStrategy's buying more tranches of Bitcoin. GameStop just announced they're going to buy Treasury, and a bunch of other companies are kind of following the Sailor playbook. So I think this cycle is Bitcoin. So I want to know what your current thoughts are on Bitcoin, on the Bitcoin market, and if you do have a trade idea for us, can you share that?
Yeah, sure. I'd say that again, Bitcoin is the leader in the crypto world. So again, we most of the folks that know about crypto, they know about Bitcoin. and the meme coins, and that's it. But there's a huge ecosystem. And again, I'm the Ethereum world, but it's parallel to it. So Bitcoin, because of, as you say, the external buying pressure from sellers and all, is what's been moving it forward. So I do think it's still going to move up. So again, I'm from the US. We're extremely compliant. We want to follow the rules, but the new administration makes it a bit simpler and less scary, if you want, even to launch options. We won't get sued the same way that other options protocol were sued, sadly, a few years ago, because they launched without registering, but there's no path. So I think crypto as a whole is definitely on the upside path. Bitcoin has these external buying pressures that keeps the price moving. I don't know if it's going to stop at some point, but I'd say there's a ceiling. Again, I don't know if it's 150K or 200K, but there is a natural ceiling as to if you want to be exposed to Bitcoin. You've seen it, you've heard about it for now almost 20 years or 15 years. What do you do with it? And besides holding it or maybe doing the micro sale trade, there's not that much more. And that's kind of where I do see there's a diminishing return, and again, could cap 150K to 200K, where after that, I do think the other blockchains, other technologies can also kind of rally back, because it's been extremely Bitcoin story since the beginning of the year, and even like a year ago, and now it's kind of maybe the time for the other blockchains to shine. So yeah.
I typically agree with that. I've been in the space just as long as you, 2016, 2017. I've seen a couple cycles, and I think the trend is, all right, everyone piles into Bitcoin. Everyone gets rich off Bitcoin. There's a wealth effect there. What do people do? They usually go farther out on the risk curve, right? So that flows into ETH. That might flow into Solana. That flows into your meme coins. NFTs of last cycle. That's kind of the trend, or rather the what we see play out in these markets. I think it's slightly different each time. We obviously have a clearer regulatory environment, a little bit more of a risk-on environment with Trump. Obviously, Trump launching his own DeFi project, World Liberty Financial. Everyone's piling in. Everyone wants Bitcoin. I'm noticing a trend too, and I don't know if you've seen this, Guillaume. Bitcoin yield products, right? Or like wrapped Bitcoin on Solana, or wrapped Bitcoin on another chain, right? There's now this like synthetic Bitcoin or wrapped Bitcoin that is being sent out, right, to different chains, or kind of the liquidity and the price action is moving out on the risk spectrum. So I do look for that going forward, where there's a rotation. Maybe it's into ETH, maybe it's into some of these layer 2s, Solana for sure. I don't know, AI agents have taken off, right? There's a bunch of narratives out there, but it all flows back to Bitcoin, right? People get rich in Bitcoin. They want to speculate more. They want to go further out. Obviously we see how that plays out in other cycles. Hopefully this time it's different, but Bitcoin's the king, right? So I'm curious. I know you have Panoptic platform up. Can you show us like a trade, or rather, a lot of our clients, a lot of our customers, traders, they trade IBIT. IBIT's their thing. It's an ETF. It's easy to understand. It's familiar. You could trade options on it. I'm curious, how would you do a similar trade, or what are the differences between like an on-chain options trade and then something like IBIT?
Yeah, exactly. Again, I tried to look at IBIT earlier. IV rank is 15. I have a strangle open that expires on Friday, so I'm probably going to close it. So I also do the same trades as probably your audience. But as you said, there's on our platform can also do the same trade. So I don't know if I show what I mean as well is that it's a lot more transparent. So again, this interface might be wrong, maybe, but the key point is that we can trade that wrapped version of Bitcoin that you talked about. Wrapped BTC lives on Ethereum. We can pair it with a stable coin like USDC. Again, wrapped USD dollars, wrapped Bitcoin can now live and be traded. And what I'm showing here, this is the, not quite the open interest, but this is the liquidity. And the same way that you could look at the open interest, and if you're really advanced, you can dig into the options chain and see kind of the surface almost manifesting itself. We see a similar thing on Bitcoin. And again, you can see there's a little bit more liquidity on the upside. The liquidity, it's the reverse. The more liquidity, it's not like high open interest, it's rather lower IV. And here you would see maybe some put skew. There's less liquidity on the downside, more liquidity on the upside. And it's a slightly different way of approaching it, but it is similar. You have what looks like a liquidity chart. We have an options chain as well. And if we want to say, hey, I want to buy the 105 call, similar to what we have the delta. This is delta of 56. We have some moment of interest, and you can just simply buy it. And this is kind of the normal path for any kind of options chain. And we also make it very visual, so we don't want to have the options chain where it starts, but it's not where it ends, because we do want to have the payoff. Again, taking from tastytrade, I do use it every once in a while to look at my break-even points, look at where the liquidity, this is the existing liquidity. You can interact with it, the same with tastytrade, and you can change the strike. So that is kind of where you can come in, buying a call, you can actually see the liquidity, and that would be where you see the payoff. And in that case, 50 delta call is not what I do typically. Definitely not tastytrade. So you can choose different strategies, and you can say same way as before. You can do a strangle. You can also choose your range. You can choose the price, and maybe I do the 110 strangle, a little bit more bullish. And as simple as that, as long as you have collateral, as long as you're maybe not from the US, you're able to trade these. And again, that's kind of what the trading interface is doing, for our users.
Yeah, for that specific one, you're showing like a short strangle here. Is that something you find works for you? Like if you're trading yourself, you like these strangles that kind of are risk defined, and sort of you play like a range almost?
Yeah, exactly. So it's easy to sell. And again, Panoptic works in a different way. And maybe the one mind-blowing fact is that our options don't expire. There's no expiry. We somewhat make it work, but you don't have the end of the month or the dailies. It's perpetual options.
Sure.
That's one weird change, but again, it's not something that you can trade on tastytrade, but allowing to do it on the blockchain means you can have perpetual options, and you can sell as many as you want. There's no ceiling in the amount you can sell. You don't need a market maker. You don't need someone to cross you can serve this. So selling perpetual options, you can sell as much as you want, millions if you want in a single trade. Buying options, similar. You don't have an expiry. You had to buy something that's been sold before. So you need to have some level of kind of two-sidedness. But for selling, because it's much simpler to sell at any strike, at any size, this is what I do mostly. I manage my risk by understanding kind of maybe sizing and also how to manage this. But you could still buy, it could be an iron condor, for instance. You can still buy the wings and create something that has defined risks, knowing how much you lose, max profit at whichever price, and then you can go from there. But yeah.
Interesting. Okay. And so with the perpetual, we've talked about perpetuals before on the show. Is there like a funding rate for this, or is it just like, are you paying a premium? What is like, with no expiry, how does this kind of work?
Exactly. So you pay a funding rate. It's similar to a perpetual, which is you condense the quarterly expiries into an hour or a day for perps. We do the same thing. Our options don't expire in a month. They expire every minute, but they're rolled forward by 1 minute at a time. So the best way to think about this is that you trade a weekly option, and every day you buy it back and sell another weekly. You move this, and you're perpetually 7 days from expiring. And that's the best maybe framework for those that do options. So that means that when you close your position and rebuy it, maybe you make some money, the funding rate is positive. Maybe you lose some money because of the IV expanded. Now you lose, you have this kind of instantaneous rebalancing cost, but that's how it works. You sell a put option, you get paid $0 up front, and the more you keep it on, the more you make money if you want. The more you accumulate this premium. We call this the streaming premium.
Gotcha.
Which is, yes.
So premium, but streaming because it's perpetual. Interesting. Okay.
Exactly.
So we have a couple minutes left. I have two things that I want to get to, but the first is with your current users I see you have a leaderboard there. Do you have like a point system? Is there any like incentives to trade on Panoptic, for maybe non-US customers?
Yeah, for sure. So we do point, we want to attract trading, want to track the good type of trading, which is selling options mostly. So we award points for activity that benefits the system. If you're a seller, if you're a depositor, if you do a trade which is kind of risk defined, we allow you to get more points. So this is kind of a whole system in place. We've been running this since launch in December, but those that are trading get a points balance, and then this is how we incentivize. It's like airline points, but maybe this one has real value at the end of the day attached to it. And we have, again, hundreds of people, but each one is earning points by doing different activities. But yeah, we also did a trading competition over the past few weeks where we had people trade for 2 weeks. It was the ETH markets, and ETH was actually very, very huge upswing. So in 2 weeks, someone made 150%, 80%, 40% on buying calls mostly, but being directionally right.
Right.
And this is something that we'll keep running. We'll have these competitions kind of going so that there's we had a small prize, I guess, cash prize, but then we just want to have people try it out. 100% deposit minimum, so you don't have kind of the worry of losing all your funds. But yeah, we allow this to work. So competition and points for those that want to try it out.
Yeah, that looks awesome. I think I always the crypto stuff. People love competitions. They love challenges. They love like incentives. It's a little bit harder to do in traditional finance, but definitely something a lot of crypto platforms do. So I definitely need to hop on and see if I can get on and maybe do something there. So before we let you go, we got a couple minutes left. I always ask all our guests, what's your one bold prediction you have for Bitcoin or crypto broadly over the next year?
Yeah, so I again, Bitcoin, I like it. It's the granddaddy of all crypto, but I'm definitely a maybe altcoin, but again, Ethereum guy, Solana guy. I do think that the platforms which enable a protocol like Panoptic, or again, Uniswap, where we can swap, you can kind of get rid of the NASDAQ or New York Stock Exchange, get rid of the SIBO as an intermediary, and do it all with these platforms. And it used to be, again, as you said, NFTs, meme coins, very retail focused. And my most bullish prediction is that institutions or crypto native funds, those that have a lot of funds, they understand risks, they will need a place to hedge and need a place to kind of make this funds work for them. So again, you can trade options in a way that works very well for Panoptic. But I feel like institutions are maybe missing the risk management part of crypto. It's all very, very risky, and it's getting more mature. But besides options, you can trade, maybe hedge with perps. But this is not even working well. So the broad market will definitely convert some of their assets to the blockchain and Ethereum and Solana. But yeah, the use cases, making it more mature, making it more like with options, with hedging, with kind of prime brokerage type of offering, portfolio margining, is where we can attract these institutions, which probably don't see an advantage. Again, they don't want to trade NFTs or meme coins. They just want to do what they do in TradFi, but traditional finance, but do it with digital assets. So I do think that these altcoins will definitely recapture kind of the next year's kind of bull run that's coming for the institution side.
Yeah. So with that, do you have a price prediction for Bitcoin, ETH, Solana? Can you give us one?
Yeah, so Bitcoin, I think 150K is my mental stop. I think that's going to be like where people start noticing, and if broader population notices, then it's going to stop. So 150K, Ethereum, big Ethereum proponent myself. We've seen 40% in like a few weeks ago. I do think we have maybe 3x more. So I do think 6,000 or 7,000 ETH, Ethereum, new all-time highs. We're due for this for sure. And Solana, it's the little cousin, I guess, a bit more hyperactive, lots of activity. But I think they played it well last cycle. But maybe another 2x, so maybe 400. Oh, I don't know what it is at. But I would say that 400 Solana. 7,000, let me bullish, ETH, and 150K Bitcoin.
Awesome. Yeah, I hope it makes it there, please. For my bag's sake, please let that come true. So
you can.
Yeah,
that's right. You can. A lot of what you do is your bags, right? There's nothing to do with them. The again, me shilling again, but yeah, options. You can generate yield, sell covered calls. You can do a lot more with options that, again, the folks at tastylive and tastytrade know about, that you cannot do on chain yet. So that's kind of the big bullish as well.
Well, there you have it. Thanks so much, Guillaume. Appreciate you coming on. We'll have to have you on again and just kind of get an update from you on where everything is. And thanks again. Appreciate it.
Sure. Thanks for having me.
Yep. Well, that's it. We'll be back next Monday. Ryan will be back, and that's all we have today. Appreciate it. Thank you so much.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that one-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're #1 for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. as you should be, brother. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Well, he's more public in his mentality.
I'm a believer. I believe that the world is good.
And I know that the world is not good. That questioning yourself and questioning yourself in dialogue with someone you respect is both pleasant and sometimes extremely insightful and useful sometimes.
The market doesn't stop. So why should you? Diversify your portfolio with stocks, options, futures, crypto, and more from Tasty Trade. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. Get industry insights that help you find your next trade right where you need it. Tasty Trade. Download today.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply.
Oh, yeah, it is
Wednesday, May 28th, a little bit after 5 p.m. Central Time. The best time, you know what that means? It's time for Tasty Live's Evening Show, a little podcast, little podcast called The Price of Truth, where we'd like to explore the incentives that govern our world, and we've got a lot of them to explore. More on that in just a bit. Right now, let's introduce our very special guest. It's Wacky Wednesday, everybody. You know what that means. You're going to get a handful of chest hair and a brain full of knowledge. We've got with us Christopher Vecchio. Chris, how you doing, my friend?
I'm doing well. Writing out accusations, despite having neighbors who have chickens and fending off coyotes in my yard, that I'm a globalist. How are you?
That is a cold, hard fact, my friend. Sometimes it's hard to look in the mirror and face the truth, but that's so true. There's different.
Says the guy living in Singapore.
There's different gradients of. See, everyone throws that in my face. If it was relevant. You know what I mean? If it was, what would you do, Chris? If your wife missed her mother and father and sister and friends, would you say,
move them to Nebraska?
We're in Chicago.
Just move them all over here.
Mm-hmm. It was tough to do, my friend. I kept her there for 5 years against her will.
I understand. I don't understand that.
Bro, I ran out of duct tape. We had to come back. How are you doing, my friend?
I mean, the Knicks lost last night, so that's basically 80% of my mood today. So not good. Yeah.
That's your identity. You do know you're a globalist, though, right? There's different gradients. Tom is as the most globalist. Ilya is like the second most, and then you're sort of like, You're on
for sure.
that
I'm
side
living
of the
8
fence.
minutes from the hospital I was born in, and 6 minutes down the road from my childhood home.
I don't understand. Why do you associate globalism with where you live? Why are you doing that?
I went.
You're way smarter than that. Don't do that.
No. I don't think being a globalist is just about like a set of values. I think it's also about how you carry yourself. If you're like a rootless cosmopolitan who owns real estate in Madrid and Miami, right? That's very different than someone who has a quarter of an acre in their hometown. Like if you're not a globalist, if you're not picking up and moving your family around and living in foreign countries. And
no, I don't think it has anything to do with it. I think you can live in the same town you grew up with. It's about what you support, what you think is the right direction instead of policies. And I think that has everything to do with globalism.
Building more housing in my town makes me a globalist?
No. Not at all. Right. That's why I said you're like center. You're the more moderate globalist.
So I'm just a guy.
Touche. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. God, you got me good. If you don't already have both of them, go get them. But if you want to be part of Bing, this little chat box in the middle of your screen somewhere, there's only one place you can do it, and that's over on Tasty Live's YouTube channel. So head on over to the evil, and I do mean evil, Google YouTube. They fooled me. They were not, there is no reform coming. Head on over to Tasty Live's YouTube channel. Start moving those phalanges and metacarpals, even bash your skull into the keyboard to create random ass characters. The more active you are in the chat, the more big old dumb Google will put us in front of as many people as possible. We can try to deprogram one view at a time. Chris Vecchio, future slang a little bit. I suppose we can talk about the after the bell action in just a minute. Before we get there, let's talk prior to the bell. 59. Actually, let me look at cash here. Let me not quote the wrong thing. 58.88. Lots of eights there. That's good in Chinese culture. Lucky eights. 4s are bad, 8s are good, Christopher. S&P was down 0.5% prior to the close. The NASDAQ
not
was
shaking
down.
Those globalist accusations by quoting Ford
just because I know a different language. I don't. All I know is 4s. The number 4 sounds like the word death in Chinese, so that's why it's unlucky.
You're not going to need to, though, in the future. We're moving to a cool, futuristic world where we're going to be able to talk in our native tongues and just have devices in our ears that automatically translate everything for us.
I feel like you're a guy who signs the petition to add more things to the mandatory vaccine schedule. That's who I think you are at your core. 73 is not enough.
You have an extra one back there? Top me off.
Top me off. You're a guy who says, I'll take a double. I want to be double.
Safe. Just to be safe.
Didn't Dylan, by the way, didn't he take all three of them? He took the Sputnik one, he took Sinovac, so he took the Russian one, the Chinese one, and he took the US vax.
I have not heard that, so I can't comment on that, but I'd like to. I need to learn more about this.
Ask him tomorrow on air. I think I heard him say that on air. He might have just been messing around, but I think I heard him say that. The Dow Jones was down a little bit more than 0.5%. The Russell was down 1%. A little bit of reversal here after hours. Your thoughts on just the sort of malaise, I'd call it, of price action here around 58, 59, sort of this just trending sideways to up muck. Your thoughts here, man?
I mean, I don't think anyone should consider today's price action surprising. Much like what we saw in February or November or last August, the market kind of meanders going into this Nvidia earnings report. I suppose the good news is that you had a streak of 3 earnings reports in a row where share prices fell after the earnings report was released, after the press conference from Jensen Huang, and it's not doing so today. It's actually holding up here in a fairly decent fashion, enough to bring NASDAQ futures to basically where they were, maybe 50 points off the highs they were this morning at the U.S. cash equity open. So it's good news. Good news is good news right now. We saw that with the Conference Board Consumer Confidence Report yesterday as well. Stocks like the fact that people don't think that the economy is heading into an immediate recession, that they have the confidence to keep spending money, that the soft data is now turning. And if the hard data never turned itself and the soft data is rebounding, then what we all worried about in the first place. So I think the equity markets, they look like they're holding on to it still. Volatility futures are in contango. It's a nice upward slope. And VIX keeps dropping. Technical momentum is positive. Second half of the week doesn't really bring about anything that's going to change anyone's mind, particularly after the Fed told us that they have no reason to make a move anytime soon with the FOMC minutes today. So PCE report later this week, who cares? The market's going to be focusing on Trump and whether or not he puts on revenge tariffs to prove to CNBC that he's not a chicken, which I don't know if you've been following that story today.
I woke up in the middle of the night.
It's so funny.
And I saw that. Oh my God. What? I'm not a chicken? What is this? What world is this, Chris? What world am I living in when the president of the United States is saying, I'll do it. I'm not a chicken. This is negotiation. I'm not a chicken.
You know, there was something about the Mayans saying the world ended in like December 2012, and I never believed in that stuff. But you also got to admit, it kind of feels like things have been a little odd the last 13 years.
If the only thing he has left in the bag after I'm not a chicken is in a negotiation through the media with China, he says, liar, liar, pants on fire, or sticks and stones can break my bones, but words can never harm me. That's the only thing you got left in the bag after I'm not a chicken.
He's going to call Xi Jinping Winnie the Pooh, like to escalate, like he's going to prove to everyone.
Oh my goodness gracious. I thought one of the most interesting outcomes, because there was a $9 expected move in Nvidia, and I'm like, what the hell is this? And there was like maybe 2 pennies in skew, call skew, and I'm like, either this is the most complacent market or this earnings announcement completely does not matter, and it's just a media led thing. The media is making it a big deal because it's Nvidia, but the market was going, this doesn't matter. And the funniest thing is, and anything can happen. I feel like the last couple of earnings cycles, like you said, the day after doesn't matter, and then you end up getting this, sort of interesting price move 2 and 3 days after, this sort of delayed reaction. But I do think like a $9 expected move was absolutely nothing, and then to come in and get, what, a $6 move? That's crazy for how important this earnings announcement is. You get a $6 move. This was so unimportant, at least for now.
I mean, I thought we would stay a little bit more pinned, but we were talking on the last call about this. I said that we're going to have, stay inside. And we do. We move up higher, but we stay inside the expected move here. Look, Nvidia, they basically threw, I think this is an important discussion. They threw in the towel on their China business. They are effectively saying this China business right now costs us money. We are still figuring out ways to work with China and the U.S. administration to make products that we can sell into China. But like right now, it's a zero. And we're making it up elsewhere. So it's a really impressive earnings call. There was also the misreport on the EPS, which I didn't see printed correctly until after overtime ended. Initially, it said 83 cents versus 86 cents expected. And I think it came out at, it was actually 93 cents was the correct figure. So they beat on earnings. There were some nice beats on revenue. Obviously, margins compressed. But Jensen Huang seems very optimistic about the future still, despite the challenges ahead of him. And then you see it in like the Salesforce report today. You see it in C3 AI's earnings today. There's just a lot of demand for AI products right now, and the revolution's kind of rolling on in fits and starts thanks to a lot of the exogenous noise of what's happening in Washington, D.C. and elsewhere. But there are still healthy numbers being put up on the board here. It's not just window dressing. And I think, as the dust clears right now, Vic, you talk about incentives. One of the incentives of this market is that people are still mostly short. CFTC futures positioning shows that professional traders, professional speculators are still net short. And it was a really rough second quarter start. And so they got to chase performance here. You got to put numbers up on the board. As you and I always like to say, you can lose money in a bear market because everyone's losing money. You can't lose money in a bull market. And this thing is now closer to the all-time highs than it is to, where we started this month. Right? So, the incentive structure here is if you're not seeing end of the world type information, you're kind of sucked back into the market right now. And to that point, according to FactSet, we see the recent, earnings reports over the past quarter. How have they impacted the market? Companies that are beating are being rewarded more than companies that are missing. Typically in the past few quarters, you've seen if you beat, it's like a pat on the head, good job, move on. And if you miss, you've been really punished for it. That's not the case this time around. Just pulling the number up here in front of me. Sorry for a quick second. Yes, market rewarding positive EPS surprises by more than average. It's at 2.1% for the 2 days before and 2 days after. The 5-year average is for a 1% increase for companies that beat earnings in the 2 days before, 2 days after. On the downside, we're only seeing a 1.8% loss in that 2 day before, 2 day after window out of the first quarter, and the 5-year average is for a 2.3% loss. So winners are really being rewarded. Losers, they're losing, but not as much. And that tells me that people are underinvested right now. And if there's something good, they have some ability to get back in, and they really feel like they're kind of chasing.
Yeah. There's been so many, I look at the difference between, I wish I had the image. One image was floating around. But the difference between the soft data and the hard data. And I get tickled, because it was just a bunch of people that convinced themselves of something that was true. And they believed it with such deep conviction, and they were reinforced by their information circles. And I thought, this is kind of, if there was any lesson to have been learned a few years ago, going through that whole never leave your house situation.
I got your chart, by the way, Victor. Check the chat.
I got your chart. Thanks, bro. It's that, mass hysteria and groupthink it can get even the best of them, the smartest of them. And, to me, it felt like even in that moment, like this feels like one of those mass hysteria things where people convince themselves in all of the soft data, in all of the surveys of a thing that the hard data has yet to validate. And it's very possible, God, what am I doing? It's very possible that, it's just a delayed reaction. I think Ilya is sort of waiting on the data to confirm that this is a delayed reaction, I think he's going to be waiting for a while. And I think honestly, even if you got the hard data, I think there's a very decent possibility that at least initially the market's going to look through it, right? Because so much has changed since you had likely the conditions that create that softer hard data, that it's very possible the market does not do what people think it ought to do in that scenario.
Right, and that's what the chart shows. This has been floating around for the past 2 weeks. It came from Goldman Sachs. It's the difference between the hard and soft data. I don't think we've defined that yet here. I'm sure you and others have on your show, but for the sake of this audience, soft data are surveys like a PMI, an ISM, consumer confidence, U of Michigan sentiment, for example. Hard data are things with dollars and cents behind them, like home sales or retail sales, durable goods orders, things of that nature. And so when you see the gap between hard data and soft data, it's like, what am I doing versus what am I saying I'm going to do or saying I'm doing? So if I tell you that I'm really fearful, right, but the next thing I do is I go out there and I book a vacation for me and my family, I'm clearly not that fearful about the state of the economy because I wouldn't be throwing around disposable income, right? I'd be shoveling a little bit more away. And this gap that we have right now between what people are thinking and feeling versus what they're actually doing is the largest that we've seen in the data series since the 1970s. So something's got to give, right? Either people are going to go, you know what? I'm done thinking this way. The economy isn't rolling over because, again, Vic, as you and I have discussed, looking at that first quarter GDP report, which we will have a revised figure out for tomorrow, the core GDP number, stripping out inventories, trade, government spending, it was plus 3% still. Correct. And when James Bullard a few years ago was out, every time he talked, he'd tape bomb the 2-year yield. And you and I would be like, Jimmy, come on, man, stop doing this. One thing that he noted when there was the discussions of the recession throughout 2022 was that you weren't seeing core GDP spillover and you weren't seeing gross domestic income spillover, which we will get. I believe we're going to get the GDI tomorrow morning. It comes out after the second release of the GDP figures. So we'll see how widespread this decline is. But in 2022, we couldn't say definitively that we were in recession. And you and I were on the same page because when you look at the, if you want to go by Enberg definition, like widespread over a number of quarters, a variety of sectors, right? You weren't seeing that. GDP and GDI weren't there. And taking no, there's no recession, the economy's fine call going into 2023 was ultimately correct, right? Equities rebounded strongly. Commodity prices did well. Things that were growthy, they were on the up and up. Thinking about that again, there's enough there intact in the core economy that if we blow by the tariff stuff and confidence rebounds the way that it is doing, consumer confidence this week had its single largest monthly increase in 4 years, then corporate earnings hold up, right? And then we can get back to the regular business of when's the Fed going to cut and what's the major theme that the market's grappling with. And I think it's going back to AI. If I want to put a finer point on that, since the lows in April, Nvidia has been outperforming basically everything. SMH is crushing SPY, crushing triple Qs right now.
Yeah. And then all the second derivatives as well, aided by the administration passing a few executive orders or statements around nuclear energy. So that second derivative of the energy that you need to power AI and the data centers you have to build and the water that you have to use to cool the data centers, those second and third derivatives are also performing in a really, really huge way, man. I haven't been playing that.
I'm really split on this.
I haven't been playing the OCLO thing. I've just been playing my normal CCJ and SMR.
I mean, I'm split on this because if you read through the bill that's making its way through Congress right now that passed the House last week by one vote, it strips away the funding that the Biden administration put in place to incentivize companies to build nuclear here. So
they don't need money, dude. There is so much capital out there I'm telling you that these people do not need incentives. If you take away regulation from these people, make it easier to get permits and move and get some of that business started, I don't think it was incentives, bro. Like, if I give you an incentive, but then I bury you in regulations for the next 5 years, or I take away your incentives and then I make things easier for you to actually create your business and unlock opportunity for yourselves, I'm not sure that one of those directions is necessarily so much worse than the other. You get what I'm saying?
I think this is such a, remember, I'm a globalist, which means I believe in climate change. And so, like, I think that, as I've complained with you about for a number of years.
Notice you say, I believe in it.
Yeah, well, because it's the year 2025, and I thought, like, in the future we have all AI and flying cars, and instead I'm like, it's nice that the Earth is round, and people respond to my tweet like, Grok, is this true? So I mean, yeah, like it's really, it's the science is there, the data's there, it's warmer than it's ever been before. This is going to be the coldest year we have for the next 100, blah blah blah. So like, I think that we need as much energy as possible. I don't want to live in a world where we're fighting with other countries over diminishing natural resources or whatever scarce resources there are, because there is the trade-off. You can't, do you see any energy poor, wealthy countries out there in the world? They don't exist. The only way that you can grow is with mass energy consumption. And I like living in an area that has clean air and clean water. So like, let's have clean energy generation, and nuclear is a big part of that. So I want to go full bore. I'm very disappointed personally that they shut down the local nuclear plant here, Indian Point, a few years ago. And what's happened over the past year since Indian Point was shut down? The state's coal and natural gas consumption's gone up. So New York's actually emitting more pollution than it was before we shut down the plant. I mean, so like, it's just, rates are up, electricity prices are higher, we're emitting more. Like, who the hell does this benefit? A bunch of people who are freaked out about 3 Mile Island and having watched the HBO miniseries Chernobyl one too many times. I mean, nuclear is safe. It is effective. It is energy dense. It's needed. So I hope it all works out. I really do. I just wish they weren't I wish they weren't removing pathways that make it easier for it to occur. I think you should go full bore, executive orders, grants, deregulation, throw the kitchen sink, do it all.
I think there's a group of people that go, climate change is real, and we need to stop using oil, right? Then there's a group over here that says climate change is a hoax. I think there's this reasonable space in the middle which says, on its own, the Earth's temperature changes. What we are experiencing may or may not be due to additional CO2 in the atmosphere. It seems like the science proves some of that, but you can find dissent. What we likely should not do is use climate change as a mechanism to minimize the energy consumption of everyone else and save that energy consumption for those who have a lot of resources. To me, that seems like a mechanism for a sort of bondage, where I'm struggling over, like, okay, should I turn my gas on? Should I heat my water? And some other person's taking hop in private jets from country to country. And I think the hypocrisy.
They have their carbon offsets. They buy enough trees to offset their trip.
Correct. The hypocrisy of the amount of people who are in everybody's face, freaking them out over climate change, and then hopping on these private jets, going and living in their gigantic McMansions or bona fide mansions, living in 4 or 5 houses. I think the public at some point, even if they haven't taken the time to look at that issue, they'll just go, this is all probably bullshit, because the people who are espousing this stuff are preaching a gospel that they're not living. And I think, to your point, the mechanism to defeat quote unquote climate change is to utilize technology to increase the efficiency of energy and increase the abundance of energy. If you think that taking an energy source away from the people is a good idea, you must also acknowledge what you're effectively saying is, I want to lower the living standards of everyone. And if you're not willing to say that out loud, then you should shut up and go sit down, because you are a hypocritical actor at best. You're a liar at worst. And so the people, either they're too incompetent to understand what would happen if you take away all this energy source from the people. You don't understand how that works, how that would impact the economy, and that you're effectively arguing for lowering living standards. If you can't say it out loud, shut up and sit down. And I think that's the problem with that whole discussion. It's the people on the ends that are yelling at each other, and the reasonable people in the middle are kind of silent on it. But I think that's changing. I think there's reasonable people like you who are saying, I want clean energy and abundant energy. And there's reasonable people like me who are saying the same thing. And I don't think our views on CO2 or the temperature really matter. We're coming to the same conclusion.
Yeah. I mean, I actually really dislike degrowthers. I think we've mentioned this before. There was a great TED Talk a few years ago from Hans Rosling, what he called the magic washing machine. And it was, if I actually could just quote from it here, I was only 4 years old when I saw my mother loading a washing machine for the first time in her life. That was a great day for my mother. My mother and father have been saving money for years to be able to buy that machine. And the first day it was going to be used, even Grandma was invited to see the machine. And Grandma was even more excited. Throughout her life, she'd been heating water with firewood, and she had been hand-washed laundry for 7 children. And now she was going to watch electricity do that work. The point that he got at, and what he ultimately comes up with, is that out of that laundry machine, in went clothing for his mother and grandmother, and out came books. Out came time that allowed these people, instead of focusing on mundane chores, to let automation handle it, and they could spend their time bettering themselves, figuring out other ways to improve the family's home, figuring out ways to learn new skills, to build a better community, right? And what degrowthers are asking for, people that are preaching the gospel of consuming less energy and not working towards clean energy independence and abundance, they're preaching taking people's freedom away. They're preaching taking people's time away. They're forcing people. I actually think it's quite sexist, because who's gonna be doing all the mundane chores like washing the dishes and doing all of the laundry by hand all day long? Do you think it's going to be men in that kind of world, or it's going to be women? So these people on the left that are promoting a degrowth worldview, it's patriarchal. It's gross. It's offensive.
I don't know. I think it's going to be the robots. Honestly, it's going to be the robots doing the dishes at this point.
Well, I mean, it's better for me. I have a pregnant wife, so I'm doing all the dishes. I'll bring in the robots. Bring in the robots.
All right, let's talk vol for just a second. At
Really
1930,
upset the Knicks lost, Victor. Really upset the Knicks lost.
you made a wild statement just now. I'm almost shocked. You don't say a lot of things that shock me. You just said something that's just like you Howard Sterned me for a second. The idea that degrowthing is misogynistic.
Yeah, hell
I don't
yeah.
know about that, bro. I don't know if I can co-sign with you.
Okay, Victor, let's just invent a world here,
bro. They're gonna take me down.
Take me down. Come for me. Let's do a little bit of a counterfactual exercise here.
Okay.
There's no more electricity in your home.
Yes.
Who's doing the laundry now? You or your wife?
If there's no more electricity in our home, are we just the only ones, or if there's just no more electricity in the area?
There's no more electricity There's no more electricity.
I'm not worried about laundry, bro. We got bigger problems, and I got to get out there and go fix this. Whatever just happened, I need to find some picks, some shovels, because there's no guns here.
And that's my point.
Something.
So you're going to be out in the world figuring out ways to protect your family while your wife is at home catering to the family, preparing the food, cleaning the children, doing the laundry, right? She doesn't have that freedom
Maybe I had
anymore.
you wrong. Maybe you're not a globalist after all. You got some you're throwing out some very traditional conservative views right now.
I'm pro-technology. I think technology frees people. I think we should push on progress when we can.
I'm with you. I'm totally messing around. I'm pulling a string that there is no string there. I agree with you on the whole degrowthers, man. I don't even know how that even became a thing. I don't even know how people are convincing themselves. I do think culturally we have an opportunity to to promote messages, especially amongst young people, around conservation. That's what they did when I was a kid. Promote conservation, but we live in a free society where people should be free to choose, and it shouldn't be just those that have the most among us have the freedom to choose, and those that have the least are under some regulatory credit system. It is
isn't that the
insane,
question?
And that's a slow walk to hell.
Who gets freedom these days? Right?
Yes.
Like, is there a barrier to entry based on how much money you have? Right? We've known for a long time that your zip code basically determines where you end up in life. You could probabilistically say, oh, so and so was born in here, they're gonna turn out fine. They have a high floor, right? But this person was born there. They have a tough ceiling to crack. It's gonna be difficult for them to get out, right? That's becoming the K-shaped recovery after COVID never really was fixed. The top just kept getting bigger. The bottom just kept falling. And I would argue that recent legislative changes that are proposed would make that all the more difficult, which I heard you take a pretty strong stance on when it was discussed recently. So I suppose if you want to talk
strong
about
stance on what? Sorry, I didn't catch the first part.
When we talked on First Call the other night, mentioned that Ron Johnson and Rand Paul were chiding the tax legislation, calling it immoral, and you said you agreed fully. And I was hoping in a longer forum, you and I could have a conversation about it.
You want to unpack it?
I'm curious. I'm curious that you went there. Talking about, like, I'm surprising you with what I'm saying today.
Why?
You surprised me the other. Why are you so against
surprise you?
Why are you so against this particular bill?
Okay, so it's an observation of what I believe hurts the people, the class of individuals I come from, and it's a misunderstanding of what I didn't know as a young man and what I learned when I got older.
Mm-hmm.
So, when you don't have a lot, you want somebody to help you. And when people don't help you, you think to yourself, man, somebody should be helping. And it's sort of this thought process that creates an opportunity for somebody to come around and say, you know what, somebody should be helping. You know what, if you put me over there, if you give me the levers of the power, I'm going to help you. And what they do is they give you a medicine that makes you more sick. So they're going to promise you something, and they don't. What people always care about is the check that they get, and people don't ask how are you going to pay for it? Where's it coming from? And the fact that we don't ever ask that question, we are okay as long as we get a check, but we don't ask where it comes from. And this happens in all of our conversations. It doesn't matter if it's reparations. It doesn't matter if it's some tax cut. It doesn't matter if it's SNAP. It doesn't matter any defense spending. Nobody asks about the offset as long as they personally get something. And the problem is that hurts the lower income portion of our society. It's bad medicine. It makes housing more expensive. It makes groceries more expensive. And nobody tells them that. So here's what happens. I give you exactly what you wanted, okay? And it's going to take you a few years to figure out your circumstances are not better, they're actually worse. But when they're worse, you got to come back to me because somebody should be helping. And why isn't anybody doing anything about this? And there's this slippery slope that we find ourselves in. And at some point, the only way to get back to solid footing is to stop borrowing from our kids' future. I believe it is immoral to continually borrow from the next generation and the generation after that and the generation after that. And that's what we're doing. When you're $36 trillion in debt, Chris, you've borrowed from the future generations. Instead of creating growth, taxing that growth, and not taking from the piggy bank of the future, you're taking from the piggy bank of the future. That money does not really circulate anymore for various reasons, because a lot of people, 1,000 billionaires in the United States, have figured out how this system works, how to stash this stuff into an asset that will appreciate, and we just keep feeding that beast. And so I think what I thought I voted for this time around was not immediate austerity, because that will create just as much pain, okay? So you don't want instant austerity. You cut off all the government programs because that hurts those very same people. But I think there is, and we need to figure out and take steps towards a glide path of changing our debt trajectory. Otherwise, to your point earlier about the zip codes that somebody comes from, I think that's generally true. But I think the people that live in those communities can't think that way. You have to think about yourself as a person, as an individual, functioning individual who is capable of moving yourself from one place to another, from in a class structure, from one place to another in terms of knowledge and understanding, financial wisdom, wealth accumulation. You have to believe that about yourself in order to give yourself a higher probability to leave those places. And the more that we're borrowing from the future, the more that we're creating asset inflation, the harder we're making it probabilistically for the people who are going to live with personal accountability and a desire to change their personal circumstances. And so that's why I think promising everybody something and then exploding the deficit. Again, I don't know, because I can't do all the fancy math. All I did was go through it and I said, show me the cuts. Show me the increases. And my mind was blown by what they were spending this stuff on. Absolutely blown. And when I added it all up, I tell you this, it didn't look good. So I don't believe the CBO is accurate most of the time. I do think there's a bit of swamp math in $2 to $4 trillion, but I can tell you that bill to me did not look good. It just didn't look good. And to me, I think bonds being at 111, 112 are indicative of the fact that this is not addressing debt concerns right now. It's not addressing deficit concerns. And so that's, I think, if Senate has a pair, they pare this back. If they don't, this is more of the same medicine. It's just dressed in a different package. And that's unfortunate. I think the incentive structure leads us to have politicians that have the same output with different promises. But there's a part of me that looked at these group of people and I said, I don't know if they're actually going to do what they're saying. I'm not naive enough to believe that politicians are going to deliver on all their promises. But this is a decent enough departure from what was being promised on the other side, which is more of the same. And I thought more of the same was a slow walk to hell.
I found it really fascinating that you used the word, in particular, immoral. And I was trying to figure out why you would use that particular phrase. And I think that you more or less, revealed as much to me. You're approaching this from like an Immanuel Kant deontological perspective.
I don't know what any of those words mean.
Okay, like the German philosopher Immanuel Kant, he has this framework where an action is right or wrong solely as to whether or not it adheres to a particular set of beliefs or not, right? So if I do something and my cornerstone belief system is a Christian and I kill someone, well, thou shalt not kill is one of the 10 commandments. This is something wrong to do because it goes against my core set of beliefs. There are other people who are utilitarians, right, who judge an action not by necessarily a set of principles, but the outcome. Does it lead to something good? So a utilitarian may say, yeah, you may think that's bad, Victor, but we're using this debt to build roads that going to have intergenerational purpose, right? These roads will be there for your kids and their kids and future kids, right? We should build the airport, right? But so I was curious to see how you were approaching it, and you seem to be approaching it from that Kantian perspective.
No, it's even if you're using the money for a good purpose, you got to ask where's it coming from?
Well, that's the point I'm getting at. Right?
So you want to spend money, go ahead, spend money. But you need to take it from somebody. Otherwise, you need to make yourself smaller. And I think, and if you do neither of those things, then what happens is you just made a bunch of promises to a group of people and they're supporting you. Your approval levels are, relatively intact. And I'm very concerned. I'm a trader, Chris, so I'm forecasting what I think the results will be. Okay, maybe some people get new roads, but I'm not sure exactly they care about the roads or the data centers that are going to be built. I'm not sure exactly that's why they went into those voting booths and pressed that lever. I think they were voting for better personal circumstances for themselves. And when I look at that type of budget, I see it as irresponsible, and I see it as something that's going to exacerbate a set of living circumstances and living standards. And those people eventually, when they find that out, are going to be. I said this. I don't know if it was to you or Ilya. I think they're going to be exasperated, because if you tried Obama, okay, then you went to Biden, the centrist. Now you're going to what you think is sort of this radical anti-establishment candidate, and you get nothing out of it. In all of those scenarios, you feel like your living conditions, whether right or wrong, you feel like you're not getting ahead. I wonder what do you get out of that? Do you get an apathetic voting base or constituency, or do you get an angry constituency? And I'm worried about that world, Chris. I'm worried about if people get apathetic and nihilistic. That is not a good outcome for us in our country. And I think if people get really, really angry and they stop believing that they have any impact politically on their outcomes, I don't think that's good either. And I think this is a setup for that.
Yeah, I mean, if we just look at how the tax benefits and changes to programs impact people across various incomes, you don't really see any changes unless you get to like the 80th percentile of income in the country, right? And even then, like the 80th to 90th percentile is seeing a drop in the bucket compared to what like the 90th to 100th percentile is seeing, and that's a drop in the bucket compared to like what the 99th percentile is seeing. So, for the sake of this conversation, someone who's making the median household income in my county would fall in like the 80th percentile for income in the United States. They're going to see an increase of about $3,500 when all is said and done in after-tax benefits. Someone who's in the 99th percentile, Victor, is going to see about $300,000 in after-tax benefits. People in the bottom 20% are going to lose $800 a year. This is called, according to the Tax Policy Foundation. So you talk about distribution of outcomes and incentives right now, and you and I lament a K-shaped recovery and what it means for the future. One of the facts that has always stuck out to me for a number of years now, I guess this is going to brandish my globalist credentials. Fareed Zakaria wrote a book called Freedom a number of years ago. And there's a stat in the book that was always harrowing to me. He had combed through criminal records in various Western countries going back to like the late 1500s, okay? Like France, Germany, the UK, the US. And what he saw was that 95% of crime in the West had been committed by men between the ages of 18 and 35 over the last like 600 years. And so one of the points that he brought up in this book is like, as we grapple with technology and the potential displacement factors that it brings in, jobs that are almost exclusively for young men, like trucking, for example. What happens when you have 5-10 million truckers displaced that are younger, right? What does that do for stability in society? And so thinking about those trends that technology is bringing with us right now, okay, and pushing us along, and companies, you're seeing the layoffs and you're seeing the warnings from the Anthropic CEO, the unemployment rates could spike to 10 or 20%. I guess that shows how powerful his AI is. It's a funny bit of marketing, but you know, those discussions are starting to happen. So what happens? Will the current legislation, does it provide a glide path for that future and help hedge against it? I don't know if it does. And so the K-shaped recovery continues. I don't know that Democrats have the answer either right now, so I'm not saying one side's better than the other. But this bill is not going to, I'm with you. I don't think it's going to help. I don't think cutting Medicaid to boost the deficit and debt is a good thing to do.
Me either. I think it's all purpose, bro. I think people are really simple. They're much more simple than I think we give credit for. And you can give them purpose through like grievances. So my purpose is to right the wrongs of the past, or to get even on my enemy. That is an effective tool for managing people. Or you can give them purpose through sort of like hope and a vision for the future. I think the best leaders are able to give people hope and a purpose for being, and a sense of common sort of understanding, common purpose, with a vision. Stuff like saying we're going to the moon or whatever the case may be. I think Elon sort of gets that in a way. but he's not a great communicator. And, you know, I hope one day we can figure out.
Not a great communicator.
I hope one day we can figure out how to create a common sense of purpose and pride and a vision for the future that comes with a sense of positivity over grievance. I think it's much better to live in a world where you want positive outcomes for just the better, just better outcomes for your common citizen, and not at the expense of some other group of people that are living your same living conditions. You know, the Chinese working man, is he much more different than any one of us? Is the Russian working individual any different than any one of us? The only difference is every one of you gets fed a different set of propaganda. But at the end of the day, humans are the exact same, bro. It's like what Muhammad Ali said about the Viet Cong.
You sound exactly like AOC.
AOC's an idiot.
I'm pointing out that people,
her and Bernie
people
Sanders,
like her, and they say
Bernie
things
Sanders are the worst things to happen to young people.
All
they do is push a new set of grievances.
I'm telling you, the
bullshit
line
policies
they're saying,
that won't help anybody.
All
they do is push a set of.
With the Russian worker than the American government has with its own people.
Yeah, okay, but I'm not saying socialism is the answer. That's not what I'm saying. What I'm saying is, and you know what I hate about Bernie? I don't know how we got on this thing. He will talk about all this bullshit, right? And then he'll talk about the incentive structure of politics. So he'll say something like, you can't vote. You want to vote against this. You can't do it because AIPAC, they'll put somebody in office. They'll get you out. What he's effectively acknowledging is that he knows he himself is voting for his own self-interest. Because if he wasn't voting for his own self-interest, he'd be like, well, why does it matter to you that you get voted out? Who cares? You do what's in the best interest of the people. That's why we put you there. And if some other entity is putting people in place to get you out of office, it won't matter if we keep electing honorable people who are going to act in the interest of the people and not the rational self-interest. So it would render somebody, if I wanted to keep getting you out of office, but the people kept voting people in who would actually act in their best interest, it would nullify the moneyed interest. So he's effectively acknowledging I act in my own rational self-interest, and so do the other politicians, and this is why we do it, because we want to stay in office. And to me, it's like, well, you want everyone else to unionize and to act in the group's best interest, but you as a politician won't do it yourself? Give me a break, bro. I'm telling you, these people are all hypocrites. And all right, I'm so sorry. I don't know what just happened. Bonds at 112, everyone. What do you think about bonds at 112, Chris?
I got shook out last week after that 20-year bond auction, so I have no position in ZB right now that's, worth a nickel. I still like the directionally neutral activity in ZN, though, in notes, if only because you're not seeing that explosion of term premium thanks to whatever antics are happening in DC spill out to 10s. That's more of an issue for the 30s. And for the better part of the past several months, outside of a brief trip at the start of April, this thing has basically just been grinding sideways. So it hasn't been the most fun trade. I like the things that go up and up and up. But directionally neutral, short iron condor, it's worked. I'm still leaning in that direction for the foreseeable future. I don't know that the economy's falling apart. I also don't know that the Fed's going to cut anytime soon. And if neither of those things are happening, it would then speak to probably a reduction in the term premium because Trump's then stopped the tariff craziness, right? So you get some better growth expectations, but the Fed's going to cut because inflation's lower. I mean, I just see scratch for notes over the next few weeks. So 4.5% seems to be holding. You're through there, you got a problem. You're through 5% of the 30s, you got a problem. Otherwise, we're just brushing up against it. So I'm staying neutral. I like the directionally neutral slog.
I think that's probably the right bet. I think I'm getting value for ZB at 112. I think I'm getting value, so I don't mind being long. I think the most likely outcome is slop. But I'm a little bit long here. If I'm telling you, if they get to 117, bro, I'm gonna have this gigantic smile on my face every day you show up for like the next 6 months. But I think that's a pretty low probability here in the next 2 option cycles. Bitcoin, man, real quick, 107.7. Had a big argument with Ilya about this yesterday. Not an argument. What do you think about them taking away the penny? Did you care?
No. It's not like Pluto or something.
Or the Brontosaurus. Remember that? They said that one wasn't real.
Yeah, and they keep trying to tell me that it's Berenstein Bears. No, it's Berenstain Bears. Like, whatever, man.
Why do you not care? Why do you not care that they're phasing out physical currency and your sovereignty with it?
I hate the fact that I have to have pennies for things. That's it. And it costs us money. Why are we, like with the expression, the money's worth less than the paper it's printed on. Like, that's literally the penny. So.
But there's a reason that happened. We did that.
Because the globalist Trump administration wants to get rid of physical currency?
No, because we made money worth nothing. We dropped the purchasing power of money so much that we need to get rid of these things. Bitcoin 107. Anything tradable here? I know you're a long-term holder here, but anything tradable either in Bitcoin itself, Coinbase, MicroStrategy, or any derivative thereof?
One of my shortcomings as a trader in the crypto space is that I just find it so difficult to trade, and my best trades have been when it's just been like buy it and hold it, hodl it, I should say. Mm-hmm. So, it looks like it still wants some. I would point out that there's been a lack of inflow, in particular from retail. Trading volumes have dropped off. You could see that the number of addresses active, if you go to something like Glassnode, which does on-chain analysis, you'll see that the number of addresses, that smaller addresses, if you will, that participation really isn't here right now. This is institutional driven. There's a lot of passive money flow into the space, which is something unique. You could see over the past 2 months, retail has actually shed net Bitcoin holdings in individual wallets, where those wallets associated with institution or treasury for, a company, bank, even a sovereign entity like the U.S.'s wallet or El Salvador's wallet. You've seen that those types of participants have actually been adding. So this has been a rally that retail has missed out on. I also think that's one of the reasons why it's so quiet. I'm not seeing videos of, again, I mean this sincerely. My Twitter feed in the fall was littered with videos of people on boats and that pasty white guy who's, not traditionally handsome, as some might say, in Miami, Nick, and he talks like he just spent like a year watching the Chappelle Show skit. I don't know who this guy is, Nick something. But like his ugly mug was all over my Twitter feed for like 3 months nonstop every day of him like throwing bills down on some boat in Miami Harbor. And it was all content like that, right? He sticks out of my head, but it was all content like that on my For You page. And I click on these people's profiles right now. There is no flag waving for Bitcoin being back to 110. And I know you said it last week, it's because no one needs exit liquidity right now. But the fact that there's no flag waving at 110, what's 150 between friends? Mm-hmm. Why not? I have an upside price target right now of 135. I have calls in IBIT that are looking for move up to 70. So
I agree. I think there's the potential for not only Bitcoin to go dumb to the upside, but for stocks. I don't think they're valuable here, but if what I think that bill is what it is, and then the run it hot narrative is true. If I somehow, and this is very, very possible, I leave open this very real probability, if somehow I've misinterpreted what this bill is and the market does something completely different, then I think bonds are of value, likely. So I don't think I've misinterpreted it. And, we got the NASDAQ up 1% here. Bro, I think you got to protect your currency. Let me ask you a question, father to father, real quick to end the show.
Sure.
I introduced this program to my kid, $1 a book. And so he's read a lot of books, And so he's coming up on like $100 saved. 5-year-old kid with $100, crazy. I don't know how he doesn't just go out and just spend it on 1,000 like Snickers bars. But anyways, he's got this money. So then I'm like, okay, the next step is I want to buy an asset with him to sort of start to teach him this concept really, really early, that he can use his money, put it in this thing, and he can watch this number move and hopefully appreciate. And I don't want to be overly complicated, so I want to pick one asset. And so my first thought was I'm going to pick Bitcoin to be the asset. But I feel like 5 years old is sort of this important age, and if I pick an asset that won't be around or for whatever reason goes out of favor by the time he's older, I don't think it'll be a very salient lesson that I would have told him. I'll teach him the opposite thing, like, hey, we bought this Bitcoin thing, and then it's a joke of an asset 30 years in the future. You're gonna, 20 years in the future. So I'm sort of stuck between what asset to pick. Do I pick an individual stock, which has higher beta? Do I pick an ETF like the SPY, which I know will likely have a little bit more longevity? Or do I pick the highest beta asset and pick Bitcoin to teach him about? What would you do? What would you pick as the one asset to keep it simple for the kid?
It's a really good question.
Respond to.
It's a really good question. I don't know if I would teach him any specific single assets, right? Like, we don't want to just give our children fish. We want to teach them how to fish. And we don't tell them what to think. We teach them to be critical thinkers. So maybe, and I'm thinking about how I want to approach this with my daughter myself. Do we want to say like, oh, hey, you know that you really like watching Netflix and you haven't been watching, you didn't like Disney, so we're going to short Disney and go long Netflix, right? Like, how can I even go foundational before then, right? And talk about
the trade what you know method. So make the things in their life real and switch them over to the investing world.
Right. Like, like my daughter asks me all the time, like, where does this come from? Where does that come from? How do you know this? Right. And, when I get older, I want to be XYZ and, have and make a house here. Like, she has these thoughts, but I can see that she doesn't understand what it takes to get there. And that's the concept of money. So how do you teach them about the concept of money? Try to introduce it and tie it into things that they do at home. So she has a little game. Actually, the other day, she wanted to start a lemon shop. She wanted to make lemon seltzer and lemon bars, which, Victor, as you know, as a parent, you spend hours and hours and hours doing something with your kids, like 14 hours waiting for these goddamn lemon bars to set. And they take one bite and they're like, too lemony, and walk away. But so we have this fake lemon shop with the 2 lemony lemon bars on Saturday, and we're exchanging like fake coins for them. Like, oh, these cost 2 coins and those cost 1. So if I want one of each, how many coins do I need to give you? Right. So I think starting bottom up, there's, if you told me that I'd be slinging gold futures when I first started trading, I'd be like, why would I be trading gold? That shiny rock. And yet it's the thing that's kept me above water in 2025. So
that's the other thing I thought of, which is at its foundational level to have him go buy a little piece of gold and teach him. We'll start him by thinking of gold as money, which I never did. I just thought of it later on as some investable asset, and then teach him money on top of that as a derivation from gold later as he gets older. I'm struggling with this. I like that concept of making the stuff around him, like Marvel and all the Spider-Man stuff he has, bringing that to life through investing. I don't see an easy path, though, because I got to teach him what a corporation is and what future profits are. I got to figure out how to do that in an easy way.
He's at the age where he plays video games, maybe. GTA 6 is GTA 6 is coming out, and they have a stock market in the game, right? So you can.
Oh, do they?
Oh yeah, they had one in the last game.
I don't. Dude, I don't even own a TV. I don't play video games. I think
How does Victor Jones unwind? How does Victor Jones unwind at night? Ever since you stopped the sacrifice of goats in the backyard, what do you do now?
I just hang out with the kids, man. We don't own a TV, so it takes a lot of energy from both of us to keep them entertained. You know what I mean? So, we just do stuff together as a family, go out, play soccer, swim, if we're outside. Otherwise, we're reading books, doing spelling tests, stuff like this.
Nice.
I gotta get him ready for the rapture, bro. Who knows what's coming?
That was like 2011 when the rapture was supposed to happen. And again, like, things have been something went wrong in those 2 years.
Well, I want to thank you for the advice. That was really good advice. You got me in a train of thought I hadn't been thinking about. NASDAQ up 1.3%. Some people in the chat saying just go Qs. You get the diversification. Likely something will be around. You get a little bit higher beta. Maybe that's the way to go. Vic's teaching his kids to barter Campbell soups. You want to know what's crazy? My son loves to play the game Store. I'll get you out of here in 30 seconds, I promise. He loves to play the game Store now. So every time I come in to his store, I call him Mr. Jones. Hey, Mr. Jones, how's it going? He's got all these dinosaurs lined up in his room. And he's like, well, what are you looking for? And I'll have to tell him I'm looking for 3 dinosaurs. And the thing I told him to always ask up front, and he goes, what are you looking to spend? So then I'll give him a number. So let's say my number is like $30. I need 3 dinosaurs for $30. And his goal in this game of Store is to get me to buy less with more money. So if I say 3 dinosaurs for $30, he's going to try to sell me 2 dinosaurs for $40, but he's got to give me a good reason why I should do it. And it's the wildest game. I love playing this game with my kids. It's the things he'll come up with to tell me why it's better for me to buy 2 for $40. Oh, it's the greatest thing. It's the greatest thing. Chris, if the people want more from you, tell them where they can go.
tastylive.com, of course, here on air, Monday through Friday, Futures Power Hour, 1 p.m. Eastern, overtime Monday through Thursday with Radigan and Spivak, 4 p.m. Eastern, Tuesday mornings with Tom and Tony, 9:40 a.m. Eastern for Let Me Explain, and then here on Wednesdays with Vic for The Price of Truth, 6 p.m. Eastern. Also, at CVecchioFX on, which one is it now, Victor? Is it X or Twitter? How do you feel?
I'm going to give him the respect of saying X because I think he had a pair, and I think he talked critically about that bill, and so I give him a little bit of respect.
He did say it's going to be big or beautiful, but it can't be both.
Can't be both. Yeah. Christopher, I always enjoy these conversations. NASDAQ up 1.4%. People buying in their shorts right now. You get the final puke tomorrow. Then you sell them.
There's that chase.
I'll see. Yeah, it's coming. I'll see you back here tomorrow, everybody. Same time, same network, only on Tasty Live. Peace.